Okay, so just a minute, please. Okay. All right, so just trying to ensure the training materials and everything are readily available here. Okay, so now let's get right into it. Okay, so yeah, so you are welcome to today's session on QuickBooks Online accounting software. Right. So to start with, we are from Droidedge Consulting. That is the name of our firm. Droidedge Consulting, is an IT firm, right, that are specialized in, configurations and, training of accounting and ERP solutions for organizations and equally individual to manage, their business and their organization related activities. Okay, so we've done this in several capacity, and of course, we've always, we've helped several organizations, across Nigeria and different industries to automate, their business processes. And what I'm displaying here is just a few of our services, a few of the services we render, right? We do, sales of enterprise applications, say just say 300, several say GRP solutions, likewise CRM, applications, payroll and HR software, fixed asset management applications. Then we equally do, consulting fully, right? Consulting fully, as you can see, we do hands-on training as well. We do post-implementation support, for applications, talk about any application you are using or any challenge you are having, be rest assured that you can always count on us to give you, the best solution. So likewise, we do training as well, which this training we are currently, running is actually one of those trainings. And this is one of those trainings where we as an organization felt like, okay, we needed to reach out to more people to equip them, on the use of accounting software packages. For some of us that have used one or two applications, trust me, as this training go, as we proceed with this training, you will see that there are a couple of insights that you get from here that are equally applicable, on other applications. Okay, and these are a few of our partners, software companies that we've partnered with, Sage, Microsoft SQL Server, and Microsoft at large, Intuit QuickBooks and Zoho. We do Zoho applications as well, just to mention a few, right? So, and likewise, here, if you have any, you can always reach us through our address here, our contact phone numbers, and, our email, likewise, our website, which is being displayed. Okay, so that is just a little bit of introduction as to, our organization. And so let's now get into the training proper. Okay, so just to start with, so we've prepared just this small slide just to, gradually we can start with this, then we now go into the software at large, right? So now, you must have been hearing QuickBooks, QuickBooks, QuickBooks. So, quite a number of people don't even know that, QuickBooks is an accounting software package, right? Software package that is developed, and marketed by Intuit. Intuit is actually the software company's name. QuickBooks is just their product. However, we have, several QuickBooks application out there. We have QuickBooks Desktop Enterprise Edition. We have the normal, QuickBooks Desktop itself, right? And we equally have, QuickBooks Online, which is another, arm of the accounting solution. We equally have, the QuickBooks POS, the full POS system, being built by QuickBooks. This is just to mention a few, because when you hear people say they are using QuickBooks, you need to be specific, right? You need to ask, okay, which of the QuickBooks application have you used, you know? So just for you to know that QuickBooks have, a couple of applications out there, right? Okay. So, which is being highlighted here, you can see the applications ranges from QuickBooks Online, QuickBooks Desktop, QuickBooks, Point of Sale, QuickBooks Enterprise, and the likes, right? But then we particularly choose, QuickBooks Online. Reason is that QuickBooks Online is actually one of the leading cloud solutions in the world. Most businesses, most organizations are moving, to cloud softwares. They are moving beyond those, small 650 application packages that people have used in the past. Talk about Pitch and some other applications, right? And people have gone, fully cloud. People are going cloud now, and QuickBooks Online. So one critical advantage that you would always have, getting trained, right, in this application, like we're about to do, is that QuickBooks Online application is actually used, not only in Nigeria, not only in Africa, but then just all over, right? So if you move to the UK today, you find most businesses using QuickBooks Online, Canada as well. Most countries, are adopting QuickBooks Online. So, and it's a cloud solution that for anywhere, anytime, you can always access, your software. You can always work on it from your mobile phone, from your computer system. So once you just have an internet-enabled device, on QuickBooks Online, you are good to go. Your postings of couple of activities that had affected your business, right? Buying, selling, expenses, anything whatsoever, would have been, you have no issue, and you can always generate reports, on the go, right? So, QuickBooks Online is one of the leading cloud solutions, like I have mentioned, and it is specifically built for accountants, business owners, and bookkeepers, right? And one of some of the benefits includes, like I said, it's a cloud solution, it's a cloud software, right? It is accessible anywhere, and it is quite affordable. It is quite affordable. It needs to be noted also for those, companies or businesses that are looking at, buying a full license from on QuickBooks Online. It is very much affordable compared to, some other applications out there. Okay, now we love doing this in any of our trainings, right? And which is, now you could go to an interview, or you could have, a fellow or someone, engaging you, and you've mentioned that yes, you've attended, an accounting software training, and you could be asked that, oh, have you heard of an ERP system before? Have you used an ERP software before? Right? So, and it could be, something that could come as a strange term to you. Some of us might have come across it, right? And some of us might be coming across it for the first time. And the critical thing out there when it comes to application packages, finance or accounting application packages, is always that we have what we call accounting softwares, and we have what we call enterprise resource planning systems, ERPs. There are differences between these two. You should try as much as possible not to mix them up, right? So when you see a software, you need to be able to, differentiate to say, "Oh, this is an accounting software." And when you see some other systems, you need to, be able to say that convincingly, this is an ERP system, right? They have similarities and they equally have differences. But there are so many software out there, so you need to be able to, talk, from a place of authority, as someone who has attended our training, to be able to say, yes, I know what accounting softwares are, and I know what, ERP systems are. Now, what are some of these differences, right? What are some of these differences? Remember, like I said, this is just an introductory part. These are just, one or two elementary, aspects, before we move fully into, the training proper. All right. So now we have similarities. Likewise, do we have differences between what we call accounting softwares and ERP solutions? But before I continue, right, before I give us this very much needed insight, I want to confirm from us if I am still very much audible, if you can hear me and if you can still see my screen, so that I'll be sure I'm leaving no one behind. So please, I need you to confirm via chat if you can hear me clearly and if you can, see my screen before I proceed. And please, if you have any question as we proceed, please feel free to drop them via chat within the training environment. I would always pick them up and answer them, right? And my colleague equally will be, rendering one or two assistance to us. Okay, so just to confirm. Okay, thank you so much. Thank you, Kingsley. Thank you, Michael. And thank you, Emmanuel, as well. Okay, so differences between accounting software and ERP packages. Remember, they primarily, their primary goal is the same, right? Their primary goal is the same, are always the same. But then, an accounting software, anytime you are working on an application, and what it does basically is just to hold, the general accounting related transactions, like banking, when you spend some money or when you are receiving some money, and you get to post that into your application, account payables related transactions, receivables, let's say invoices, customers invoices, suppliers invoices, and you get to generate your normal income statement report and all. Those are the basic or core functions of what accounting system or accounting softwares will do for you. So if an application does that mainly, right, it could be tagged as being an accounting software. But an ERP system, right, is a much more bigger application. So an accounting software is like a child, but an ERP system is like a robust and much more bigger application, right? Such that, accounting software is primarily peculiar, right, to the accounting department of a firm, or, for majorly small businesses and just some medium scale businesses as well, right? So because all they are about is just the basic bookkeeping. They want to know where they've bought, they want to know what they've sold, they want to know if anybody is owing them, which is the core thing, but then an ERP system encompasses some other things. For instance, you can see here saying it holds everything a business needs to operate, right? It track, and reports, right? To operate, track, and report in line with their, business activities. Talk about ERP systems, it's being used by other departments. Like I mentioned, what I have mentioned on accounting software is primarily, the core functions of the accounting department, right? But ERP system has, a dedicated inventory module that is robust, where, you talk about procurement department, inventory department, they are within the system. Procurement department would come in, when user department raises a requisition, they come in, they do PO from, even before a PO, they do stuff like RFQ and all, request for quotations, converted to a PO. Some of these things, these are, you talk about the logistics department, within the same application, right? Individual department has a role or has a function. They are using that same application, right? Their inventory department, their e-commerce, their contact management, their sales rep, everybody, is fully onboarded into that one application. And we have examples. If you look at MTN today, MTN is using, Oracle, right, as their ERP system. So all their departments are all encompassing into one, application. So even the fixed asset team, let's say when an asset is bought, a computer system or whatever, right? Someone needs to go into the system and key in, the details of that asset. Do you understand? So these are different departments coming on board using one application. So ERP system is like a mother, right? It's like a mother system, right? Which is being used mostly by big and large organizations actually. Talk about multinationals and all, right? So that is what an ERP system is called: enterprise resource planning. It's a much more bigger system, right? And I will walk you through examples of them, right? The next thing here is that accounting software cost is relatively low, right? Is relatively low and affordable, right? Compared to ERP systems. Imagine Dangote PLC, imagine MTN, Airtel. These are big firms. Even there are firms that are not as big as them, that are using these ERP systems, and we have several out there. So, and another point here is that accounting systems, would always accommodate finance department operations and little of inventory, like as I've mentioned in my first point, right? While ERP system synergizes all departmental activities, right? It simply means take the basic example that I can also give you here is, in a firm, you could always have the accounting department, the accounts department rather, and you could have HR department. Now you would realize that in some companies, HR, they are using the same application, right? You would realize that, okay, once the HR person at the end of the month or towards the end of the month does their when they do their payroll related activities, right? Okay, they've done pay runs, they've sent pay slip to individual staffs, individual employees, right? So at the end of the day, when they are done, there's what we call payroll journals, right? So that all of those the salary costs for that month, translate into the financials, right? So when they are done with their own payroll process, you know, all of those activities that they've done would report properly, into the ledgers, for the account department. So when you as an accountant or as a CFO, when you log in into your system, you can always see, what the HR team have done. All of this is possible within an ERP system. You can always see, when your inventory department have received item. You can always see when your sales department has raised sales orders and when they've done invoices. You can always see. You understand? Because you are using an ERP system. So everyone has their core functions within the application, right? And the last point here is that the accounting software is always limited in scope. It's limited to the basic bookkeeping, right? But then an ERP system is always robust and it accommodates several departmental activities. Now, what are those examples of accounting systems? Right? Examples of accounting systems are your QuickBooks application, both your QuickBooks Online, your QuickBooks, desktop, enterprise, and all. You know, they are all accounting systems because what they do primarily is they do, the main bookkeeping function. You understand? Of what your organization, some of them equally they do little of payroll, right? Some of them equally do, little, and when it comes to inventory too, yes, they do inventory, but it's not as robust as an ERP system, would give you normally. So we equally have State Business Cloud Accounting, is equally a cloud application. We have Sage 50C, Sage 50 Cloud, and even all of those speech tree that you are used to, Sage 50 US and the likes, right? They are equally accounting systems. Examples of ERP systems, we have say 200 Evolution, we have say 300 ERP, right? We have Sage S3, we have SAP, some people call it SAP, but it's called SAP. Then we have, Microsoft Dynamics, Navision is equally an ERP system, right? And I would show us basically, right? I will show us a little bit of the 200 and say 300, what it looks like, so that when you are talking out there, you can always, mention that yes, you've seen what say 200 application looks like and what say 300, ERP application looks like. Okay, that being said, let's see. Do we have any question, whatsoever, before I proceed? Oh, one moment. If there's any question, please feel free to drop it. Okay, trying to. Okay. Okay. If there are any questions, please, before I proceed further. So I'm trying to, call up a couple of like two, ERP systems so that we can just have an idea of what we are looking at. Okay. Okay. So I think we do not have, any question for now. Okay. Is busy software an example of accounting? Yes, exactly. Yes. Busy, is an example of, an accounting system because, like I said, it does, majorly the bookkeeping part, right? Of okay. So one minute, please. Trying to log into just one of my ERP systems so we can just see what it typically looks like. So let me show us. Okay, I'm just going. Okay, so this is say 200 application, say 200, right, is always tagged as a mini ERP system. Is between being a full ERP system and as you can see, we have several modules, account receivable, contact management, bill of material, fixed assets, delivery management, account payable, inventory, job costing, point of sales. These are procurement, uh, voucher management. These are different modules, general ledger, tax. These are different modules that does different things. It's a robust system actually, right? And it will do to a large extent, even so many things, your conventional accounting systems, would not do. So, and what I'm trying to show us here is what, say 300, right, application looks like. It's an ERP system as well. You can see we have different modules, right? Full scale ERP systems. And one thing about all of these ERP systems is that, they are modularized such that if there's any need to scale anything, as an organization, as a big organization, it is very easy, right, for them to do that. So this is what say 300 looks like, and this is what Sage 200, right, as an application equally looks like. But then our core focus today is QuickBooks Online. But I just needed to show us, what ERP systems, looks like. Okay, so yeah. So let's now set up, right, our QuickBooks Online. So today's training basically will be setting up our QuickBooks Online application, right, for our respective, so that we have idea of how systems are being set up. We'll look at transactions and we'll equally look at the report proper, right? We would equally look at the report proper, our applications, how we get to create master files, our respective records, and how we equally get to do, transactions, right? As the case, may be. Okay, so trying to sign in here. So let me share my screen. Okay. So I'm trying to log in into my QuickBooks Online accounting software. Okay, let me do this so that we don't get confused. So he's currently logging in. Yes. And this is what, my QuickBooks Online accounting software, right, actually looks like. Okay, so here the system is trying to, when you log in, this is what you see. The system is trying to walk me through, uh, some basic configuration. So what is my legal name? I want to call it Droidedge Training. Okay, so industry. I want to, yeah, make reference to the fact that we are professional service company, so we do consulting. So I'll click on next. Okay, so in our case, it's a company. Click on next. So this is just like, what we have here is just like, it's showing us, basically, the basic, setup. So I get to click everything, click on next. So it's like a little walkthrough on some of the basic things you need to. Okay, so let's set up task code for you. Yeah, so I'll click on next. Okay. All right, so let me just skip for now. So it takes me to the main module. So skip for now. So because we'll be doing all of these things, ourselves as we proceed. Okay. Sorry. Our software is getting ready. So let's go. So similarly, when you log in into your QuickBooks online company, this is the same thing you get to see. Please just a minute, please. Please, if you have any question, just drop it for me. So just a minute. Okay, I'm back. Okay, let me see. Okay, there are no questions as we speak. Okay, good. So let's go back to, yes. So this right here is QuickBooks Online accounting software. And like I said, it's a cloud solution. Simply means it can always be accessed, you know, anywhere at any time. All you need to do is just have access to an internet-enabled device, right? So that's one key thing. So you could be asked that, okay, you said you've used QuickBooks. Which of the QuickBooks have you used? QuickBooks Online works with internet actually, right? Because it's a cloud solution, unlike the QuickBooks desktop, right? Where you have to install, when you install, you don't need internet, facilities and all before you work, right? But the advantage, of QuickBooks Online is that number one, no installation is needed, right? All you need to do is once you create an account, you can always log in, right? By going to app.qbo.into.com. Once you punch in this web address, you sign in with your login details, then you are in, right? That is one of the good thing about it, right? The second good thing about it, you know, of course, is that unlike QuickBooks, your normal QuickBooks desktop, where if you have it installed, let's say on your office system, or you guys have a server there in somewhere, right? So if you do not have access to that system you've installed QuickBooks desktop to, then there's no way you can work, right? But using QuickBooks Online, you can work on any system. You understand? You can just get a system, sign in, you start working, or just your mobile phone or anybody's mobile phone or system. But the only thing is that your username is unique to you. Your signing details is unique to you. You are not to share it with anyone, right? So be rest assured, even if you travel to anywhere, anytime, or you're doing anything, you can only sign in anywhere, right? So that's one of the benefits that QuickBooks Online has, over your typical QuickBooks, desktop application. Okay, so that needs to be noted. Okay, so now this is QuickBooks Online once again. To my left here, we have the respective modules, right? We have the respective modules to my left. We have the menu, the dashboard, the transaction screen module, the sales module, the expenses module, customers and leads, reports, employees, VAT, and all. We have the overview, the apps module as well, right? And we have here, so anything you get selected, right? Anything you are selecting from the module, basically, it gets displayed in what we call the work area. So this section of this screen where I'm hovering my mouse cursor, right, is actually called the work area. So if I get to select anything here, say I get to select dashboard, right? Or say I come to sales here and I click on customers, you see that the screen changes to that of customer screen, right? And as you can see, it's currently blank because we will be creating these things together, right? We'll be creating them together, bit by bit, and be looking at one or two modalities, as it translates to our transactions and reports. Okay, so yeah, the basic setup. So the thing is, when you are logging into a new system, right, what you need to do, as a software person, is you need to ensure that your setup is properly done. And you are starting from the most, important setups, which is, entering company related, companies related information. Talk about the company name, the company's address, and all. So how do we do that? How do we do that? So we can always do that by coming to the settings module here, right? To the settings module here. Now, it's also important to note that QuickBooks Online actually has, the modules here, are being displayed. It has two views. Let me just put it like that. It has two views. It has the accountant view, where some of the terms that are being used there, right, is accounting related terminologies, right? So you talk about journals, you talk about a couple of other stuffs like that, or chart of account and the likes. But for someone who doesn't have accounting related background, it's equally easy to use, right? So I can always come to my settings here, to my settings button by my top right here. When I click on it, I can always switch my view. You can see you are currently viewing QuickBooks in accountant view, right? So, but if I do not really have much accounting background, I can always switch it to business view. So some of these, things we have here, the names at which some of these things are called, would literally change, right? They will literally change. So you start having stuffs like okay. So you start having stuffs like, if I click here, you start having stuffs like receiving payments, receive payments, make payments, and couple of even in your reports. So some of these terminologies are terminologies that you can easily relate to, right? So you can always switch from a business view, to an accountant view. So whichever that works best for you, can actually be adopted, right? So I would, for the purpose of this training, I would take it back to accountant view, right? Although I will try to, juggle, what some of these things mean, so that we can easily relate to them. Okay.
Yeah.
So
Sorry, Aziz. I
okay.
think Abiodun Manuel and Femi are raising their hand. I don't know if they have any question. So, but if you do, please you can drop it in the chat box so we can attend to it.
Okay.
Abiodun Emmanuel and Femi. Yeah, thank you.
Yeah. So I think we have, a question here by Lawal Abiola saying, can QuickBooks Desktop and QuickBooks Online work together? So when you say work together, you need to understand that they are, in as much as it's from, the same software company, but they are totally, different. The architecture is a bit different from each other. So you would always choose the one you want to go with. Is that you want to go with QuickBooks Online, or you want to go with, QuickBooks Desktop? So they, both of them have their core strengths and their limitations, and I think I've shared, a little with us actually, right? So if there are any further questions, please just feel free to drop them. I would always, address them. Okay. So now, so let's come back here, which is the most important thing when you are using any new software or you are working on any software, is to confirm that your organization details is well, set up. I mean, well created. And for us to do that under QuickBooks Online, I'll come to my settings, then I'll come to account and settings, right? I'll come to account and settings, and this is where I get to do some default setup, right? So we'll do some default setup here. We'll just quickly, the ones that actually affect the training we intend to we are getting into, right, are those things we'll easily do here, right? So we'll be doing our default settings here, and we'll be explaining one or two things for us to take note of. And when we leave here, we'll go into the chart of accounts. So because it is actually a take home, the chart of accounts is something you don't want to miss, trust me. So because we'll be breaking it down for us, how do you even chart an account? How do you create an account? What is chart of account? For those of us, that are non-accountants, would explain to us in detail, right? And for those of us that are accountants, or business management students, would equally get what a chart of account is, how you can chart an account, right? Because for you to have attended a software training, especially the one organized, by us, right, is actually one of the take home, chart of accounts and how you need to chart an account. So we'll get there shortly. But just quickly, let's do some default setup here. Like I said, organization related setup, right, under account and settings, right? So I'm here now. The very first thing we need to do here is to set, our setup under the company. So I'll click on edit. So within the company section here, we have different, different categories of setup, right? So primarily we have here company. So I'll just come here, edit, confirm my company name. So like I said, I want to name my company name Droidedge Training. So in your own case, when you are practicalizing this as well, say you are doing it in real time, fine. Then let's say during the break or maybe after today's session, please, when you are doing, you can always make use of your own, desired company name. So it's not compulsory you use Droided Training. So you can always be unique to you. Okay, so Droided Training, if you have any company logo, you can always, upload it by clicking on this plus button here. When you click on the plus button, then you go to add your file, your logo. So let's say that take for instance, okay, this is my company logo. I'll just click here, right? So then I will click on save once it's being uploaded. So that is how you get to upload, your company logo. So I'll click on save, and that becomes, my company logo. That gets shown, on your respective source document. So business ID number, that's your registered, CAC is not compulsory anyways. So you can always enter such. Your tax identification number, you can always enter it as well. but it's not compulsory in this case, right? So for our training related this thing, we are not adding any of this. Then we'll click on save, right? So quickly, company type, yes. Industry, everything is well set up. Okay, so our tax form, okay, so we are making use of corporation basically. Okay, or let's use partnership or limited liability, right? Industry, so we are into professional services. Select that and click on save. Okay, that is sorted. So companies, contact information, the company email address, your email address basically, the company's, phone number, and company's website, can always be added. The gist is that, it is the informations you've entered here, right, that gets displayed on your source document when you generate invoices and all and the likes, right? But then the website section is not compulsory, right? But the phone number and the email, you can always endeavor to add them. So it could be your personal email address, no problem. So company address, also you might want to add your company's, address, so that when you raise source documents, this gets displayed, on it. So I'll do this and I'll click on save. Okay, so billing and subscription, okay, nothing to be done there. Sales, so here you might want to, customize one or two things. So in this case, our preferred invoice term, yes, 30 days, delivery, preferred delivery method, none. Okay, so we need to enable, just couple of stuff there. Tag, yes, we'll be making use of tag, yes, as a custom field. I'll click on save here. Nothing much is being done there, right? Then invoice payment instruction is fine. Product and services, yes. Do I want to track inventories quantity on hand? Yes. It's very, very important. Let's say you are into, trading. Your company is into trading, or, you want to leave this enabled to confirm that, yes, you are tracking quantity on hand, right? So that is fine. Track quantity and price rates is equally fine. So, okay. So what other thing might we need to change here? Nothing under sales here. Nothing. Everything is actually good. Everything is actually good under sales here. Expenses, okay. Show items table. So yes, all of these track expenses and item by customers. Okay. We really don't need them. Make expenses and items billable. We don't need them. We want to use purchase order. So yes, is on. So which is good, right? Which is good. Okay, so we save this. This is fine. Nothing to be done on time. Advance. So the area where I want us to pay, also critical attention to is this advanced section of things, right? Because the primary thing here, is what we tag as accounting period. So, each organization always have what we call accounting periods, right? Accounting period simply means, okay, when you are generating your report, be it a business owner, you know, for your organization, you need to, always ascertain what your accounting period is. So accounting period, in some cases, is being called financial year, right? It's always a 12 calendar months, right? It needs to be, up to 12 months. So some people's accounting period would be January to December each year. Some could say it's from February, ending in January the following year. Some, if it's starting in March, let's say our accounting period by one or two instances, it's starting in March, 2023. Simply means when it starts in March 2023, I need to count 12 months. So it will end, in February 2024. So that is why. So accounting period is when you are generating a certain report as your year end, when you are doing what we call year end, to say, oh, within this accounting year, how much is actually my profit? You know, how much have I expended, as expenses in total, right? How much have I gotten as revenue, as sales, right? So That is why accounting period needs to be ascertained. So if you are working in any firm as an accountant or you are a business owner, you also need to make conscious decision or even ask what is my accounting period is, because it is very, very important you replicate such into your accounting system, right? Or ERP system at large, right? So here the system is asking us, what is your accounting period? The first month of your financial year, is it January? Is it February? So that the system can always estimate, your what your accounting year looks like, right? So for the purpose of our training, we are running January to December, of each year. So that is why our accounting, period is starting in January. So, and remember, if it's starting in January, it simply means it's ending in December because you need to count up to 12 months. So, and in most organizations, is dynamic, right? So, don't be surprised when you see some companies that start the accounting period. Let's say it starts in July, right, of a particular year, and it ends in June, of the following year. So, it's always something that is very, very that happens normally, in our business world. Okay. So first month of tax year, same as financial year, yes, it's fine, very much fine, right? So and tax year, aside from your own accounting period, government has its own what we call fiscal period. So which is always January to December of each year. So yes, January is fine by us, and that is the same as our financial year. So accounting method, yes, accrual, that's the best. Accrual method, we have accrual and cash. So accrual is what we are doing, and accrual is just telling us that yes, always recognize your revenue. When I sell, my sales should be recognized. The system should ascertain it when I sell, right? And what we translate that properly when we get to that part, I would explain to us in detail. So, and expenses should always be recognized, or costs should be recognized when I equally incur them, not necessarily when cash is leaving, my bank account. No, you might have incurred an expense, in an early part of the year, whereas you are paying for it, later, being that you are owing. So accrual is always the best. I would explain this in detail when we get to transaction proper. Okay. So now another critical thing we need to note here is close the books, right? Close the books. So close the books is all it works in it's like some organizations, right, always close their records, you know, at every month. You could say that now that we are in 9th, of September. So if we want to close the books of last month, which is August, so that we have reported for August to the management, and you want to ensure that no one goes back to August and post some transactions so that it won't distort your report, as an accountant. So you would always come here to make use of this feature called close books. So when you click on close the books, the system would always want you to select your closing date. If I want to close, my records for August, I'll just click on 31st, the last day of August, and I'll click on save. So it simply means nobody up until that August, nobody will be able to post transactions within the application. And if I need anyone to post transaction, I'll simply come back here to open my period. So for those of us that are accountants, please, it's always important. A good accountant would always close, their books promptly. So in some firms, they do a daily closure of records, right? Let's say you do daily reports and all. So when you are done for today, you can always come here as a senior accountant to close the books so that some of your subordinates will not go back and say they want to enter an invoice or they want to reverse an invoice, which will distort your own record because you must have reported to say, oh, we've made a sale of 800,000 in total, for the day. So you want to close your books properly, right? And by practice, most companies close their books, by practice, by standard, they close it. The minimum that they do is to close it every month, right? All you just need to do is to say, okay, maybe once we get every fifth of a new month, we need to have finalize our transactions of the previous month, and you come here, you come here and you come and close, your accounting record. For business owners, what it simply means is that, when you are done for the day, you want to close, you want to do your account and say, oh, this is what I have made. And if you have an accountant or if you have one or two subordinates that are helping you to post one or two things to record sales, so that they won't go back into the system and do, some what we call abracadabra or post some things in error. You can always close your books yourself to come here. So you come to account and settings, you come to the advanced segment, and you come here to, activate close your books. So that is one of the key functions that QuickBooks Online gives you, right? It allows you, so anywhere, anytime, you can always close your record so that someone would not go and distort or reverse, any earlier posted, transactions. So you can always come here, open it, close it, and change the date and, whatever. So that's one of the critical take home you need to note, right? When using not just QuickBooks Online now, or when you are working with an accounting software, you need to know, how to close your books properly, right? Okay. So if there are questions, just drop them. Once I run through these, I will look at them. So now let's move faster now. Okay. So company type, yes, that's been sorted already. Chart of accounts, enable account number. So now we'll get to chart of account properly, right? We'll get to chart of account, properly, like I said. But you need to know that some systems would always allow for what we call, ledger codes. You would understand what I mean by that later, right? But naturally, QuickBooks, Online comes with that feature too, but it's not being enabled automatically. So when you want to assign ledger codes for your ledgers, you need to come to account and settings to enable it, right? You need to come to enable to say enable account numbers. So account numbers is what we call ledger codes. You will see that in details, right? And I would explain what that means, in details for us much later. So I want to enable, account numbers and click on save, right? Categories. Yes, I want to track classes and I want to track, locations. We'll get to understand what this means, in detail, classes and location. Okay. So let me just use one to entire transaction actually. So classes and locations, I would save. Classes and locations are just like reporting, tags, reporting segmentation, right? For those of us that are accountants, let's say, oh, let's say you have one or two business units or one or two departments within your company, right? And you want to know, okay, what accounts are spent, what HR department are spent, in terms of expenses. Okay, what is it that maybe management staff has incurred, or even locations. You could have several branches, several locations to say, okay, what is it that Lagos office has spent on internet expenses, for your own internal reporting, classes, and location is always a good tool, and we'll see how that is being used, as we proceed. Okay, so I think those are the major things. We are not interested in project as we speak. Okay, so yes, Nigerian Naira is our primary. Okay, date format. I love using day, month, year. So I want to change this to be day, month, year instead, right? So that it's very, very easy for me and relatable. Okay, so want me if I enter a bill. Okay, so I think this is fine. I'll click on save. And what we've done basically, right, is to set up, like I said, the default settings. The default settings, as it affects our company, right? Our training company. And there are so many things that you do need for that. You can always come back here to enhance, right? So many things. But for our training proper, these are the basic things we want to do. We want to set up our company details, our company name, our company logo, right? Our company phone number, our company address, right? And tomorrow, let's say in real life, your company address changes tomorrow, you can always come here. A good software will give you the luxury to update, your company's address, right? Your company's phone number and whatever. Even if your company name changes, tomorrow, you can always come here to enhance, to modify, right? So that being said, I'll click on done. Okay. So that's the first part of our setup, right? So we'll then be moving to the next part of our setup, which is, we creating one of the most important thing, when it comes to accounting systems, which is our charts of account. Okay, so we'll go into chart of accounts, but then let's see, do we have any question for us? Yes. We promised that the class will be recorded and we'll share the video, but that should serve as a secondary material to you, to all of us, because there are some critical things we'll be getting, being present here, right? And there are some questions you can easily ask here directly. Although we recommend and we provide rather, post training support. Should you have any question, you can see we have the group chat. You can always drop your questions, no matter how it is. We would always respond, to you, so that your question can always be, something to learn, for others also. So yes, we'll be sharing the video with us. Okay, so let's see. Okay, the project is not appearing in your QuickBooks. Okay, Biodun just mentioned that. Okay, yes, it's not showing actually because it wasn't. Okay. Probably what you mean, is that it wasn't showing on that configuration, on that setup. Okay, so if it's not showing, it's probably because, remember from the guide that we sent to you when you were signing up for this QuickBooks software. Remember, QuickBooks has 3 different plans. So we said you should sign up for the Plus, QuickBooks Plus. So you might need to check that. You might need to check the edition, that you are currently, signed into or sign up for. So that could be the reason why you are not having that project. Okay, so but if you want to enable project, let's say you want to attribute any transaction to project, if your organization is a project-based organization, or for your own training, you can always come here, advance, and you can always edit this, to enable the project feature. So someone said that he didn't get some setup, he didn't get some okay. I think that's the same thing, Biodun. Okay, I think I've answered that already. So please feel free to drop your questions, because we are moving into, like I said, one of the most important parts, of the training, which is, the chart of accounts. Okay, so you don't want to miss it. Trust me, you don't want to miss this next phase of things. But I need to be sure we are together. You can hear me and you can still see my screen before we proceed, to the chart of accounts. Okay. So I need you to confirm that you can hear me and you can still see my screen, please, before we proceed. So please just drop a chat if you can hear me and if you can see my screen.
Yes, Aziz, you can see your screen and
Okay,
hear
cool.
you very audibly.
Okay, so let's quickly get right into it. So uh, by 2 o'clock we'll be going on a break, but then let's quickly utilize, the remaining time before that 2 o'clock, because we are very far behind. Okay, so now chart of accounts. Before we look at chart of accounts, on QuickBooks Online, there are some primary concepts we need to understand, right? As it involves, chart of accounts. So chart of account, general ledger accounts, they literally mean the same thing. So now, the very first question you need to ask yourself is, what is general ledger, right? The general ledger, and for those of us that are, non-accountants, please follow along, because I will try as much as possible to break it down for us so that we understand. See, for any accounting software, right? For any accounting system or ERP system, as the case may be, that you might want to use for your business or for your organization, right? Note that the general ledger is mostly referred to as the heart of the accounting software. So it's like the heart, without the heart, if the heart is not beating, then one is as good as dead, right? So same thing is applicable to general ledger. You see, it is because the configuration, how you must have configured your general ledger, would determine how the reporting of that entity, you know, it will be structured both statutorily and management wise. What do we mean? What do I mean? You know, the way your chart of account, the way you must have created them to say, okay, these ones are my revenue, these ones are my sales. So anytime I'm incurring expenses, right, I want to have an expense line, for fueling expense. I want to have an expense line for salaries, and wages. I want to have an expense line, for maybe repairs and maintenance of vehicles. I want to have an expense line for maybe purchase of aircraft, aircraft parts, or purchase of, talk about so many things. We'll look at some of these things in details, but how you must have configured your chart of account will determine how your entity would report statutorily and management wise. So management wise, in the sense that, like I said, management might be interested to see what each department is expending at the end of the month, to say, okay, let's see how much accounts department has incurred on transportation expenses. How much this other department has incurred on repair and maintenance, for a couple of stuffs in their department, right? For management decisions. Management would want to see the full breakdowns, right? But, let's say your FRS, for instance, or any regulatory agency, is not interested in seeing those departmental level reporting. They just want to see your revenue, your cost of sales, and some couple of other stuff. Right. So that is why we said it depends on how you structure your chart of accounts, right? And we mentioned that there are several components that general ledger caters. Of course, the chart of accounts is there, the budget is there, and the cash book is there, right? So we'll go into details, right? So now, what is a chart of account basically? Right? A chart of accounts, is a listing of the names of accounts, the names of ledgers, that a company has identified and made available for recording transactions in its general ledger, right? And it goes further to say a company has the flexibility to tailor its chart of account to best suit its needs, including creation of accounts as at when they are needed, right? And it goes further to say the chart of account should give anyone who is looking at it a rough idea, of the nature of your business, right? By listing out all the accounts involved in your company's day-to-day operation. So what that jargon I've just read out, what it simply means is this. Now, if you are being called an accountant of a firm, right, or you are an accountant, when you see a chart of accounts, when you see a list of general ledgers, you should be able to identify or to say, oh, this company is a construction company. Oh, this company is a manufacturing company. Take, for example, if you are looking at a chart of account, or if you are being told to chart an account, and you are seeing, okay, a ledger account for raw materials, under inventory. You are seeing work in progress, and you are seeing finished goods. You know, anyone, you should know that that chart of account, that company that has that sort of a chart of account, is a manufacturing company. Do you understand? And for a construction company, it will be totally different. A construction company will not necessarily have raw material, finished goods, and work in progress. Do you understand? So what they will have, their line of ledgers will be slightly different, right? It will be slightly, totally different. Likewise, if I'm seeing a chart of account and I'm seeing, stuff like, okay, I'm seeing a revenue ledger, a sales ledger account saying, proceed from airline tickets. I'm saying purchase of aircraft spare parts, purchase of aircraft tire, something like that. You can easily look at that and you say, oh, this company is actually is within the aviation sector. This is actually an airline that has airplane that sells tickets and all, for travelers, right? So same thing is applicable for our own firm. For instance, some of the line items you see on our ledger account is, you see, okay, revenue from consulting, you see revenue from training, You see revenue, and it goes on and on. And when you look at it, you can easily say, oh, this is a software firm, right? So that is what a chart of account simply, entails. And for those of us that are non-accountants, we need to also note that, see, what we just call chart of account is very simple, right? You see, for everything your business does, any activity your business does, it translates into financial record. When you buy something, when you sell something, when you incur an expense, to say, oh, you bought fuel, fueling for your generator, the generator you are using to power or you are paying for electricity expense, right? All of these things are things you do on a day-to-day activity. And you need to have a ledger account that you can actually record such activity into, so that at the end of a certain period, you can always generate your report to say, okay, how much have I spent on fuel, within this week? The only thing that would allow you generate such report is when you have a ledger account, an expense account called fueling, so that anytime you are giving, let's say, Aziz as your staff, to say, oh, go and buy fuel, right? When you give Aziz 20,000 naira to buy fuel, you can easily go into your software and post that I have bought fuel, and you select that ledger account, and input there to say, today, oh, so date, I have bought fuel, 20,000, right? You see, that fuel, is a ledger account. Oh, I have made sale, your revenue or your sales account. You see, that sales ledger, is a ledger account. And when you now look at all of these things being listed, everything together is what you call the chart of account. Because individual ledger accounts, is created, to record one or two activity, right? So when you spend money, when you receive money, these are stuff that translate into, your ledger account. And that is why, individual ledger account, the combination of everything is now called your chart of account. So I want to believe that should be clear to us. So let's now quickly look at, the types of ledger account that we have, and let's look at example of what a chart of account looks like before we now go into the system to create, our respective, ledger accounts. Okay. So I want to believe we are together. So if there are any questions, I can always, answer them, for us. Okay. So now we've talked about, okay, ledger account. We've looked at what chart of account is, right? We've said it's a combination of all the ledger accounts you must have identified that you'll be needing to record, to record transactions for in your day-to-day business related activities, right? So when when you are being told to even come and talk further on chart of account, you need to also note that for a ledger account, we actually have it falls into two primary categories, and we have those accounts that are income statement accounts, and we equally have balance sheet accounts, right? For those of us that are accounting students or that are accountants, we understand the differences between these two, right? Now, one of the critical difference, for you to identify a ledger and call it income statement ledger account, is that that kind of ledger account, an income statement ledger account, is an account that would only appear on your income statement reports. Take, for instance, when you generate any report, profit or loss, your statement of profit or loss report, right? All the ledgers, all the line items you find there naturally are income statement ledgers. And also, one critical thing is for you to notice that balances in such ledger account income statement, they do not roll over into another year, another accounting year. So look at those revenues, those cost of sales, those expenses ledger accounts, are some of the examples of what you call your income statement ledger. Any ledger account, that is being used to arrive, in your report, to arrive at your profit for a certain period, right, is always called an income statement ledger account. And you should note that when I come to the end of a particular accounting year, let's say 2023, for instance, right, December 2023, the moment I'm transcending into January 2024, right, note that any balance in any income statement related ledger would automatically, turn to zero the moment I cross to January 1st, 2024, right? Because income statement ledgers do not roll over. You should note that. Have that noted somewhere. When a ledger is being called an income statement ledger, balances in them do not roll over into a new year, right? But reverse is the case when we are talking about balance sheets, accounts. Balance sheet accounts are set of ledger account that appears on your statement of financial position, balance sheet. And balances in these ledgers would always go over into another year. Take, for example, your cash and bank, balances. Let's say as at December, 2023, you have a balance worth, say, 500,000 in a GT bank, in your company's GT bank ledger. The moment you are transcending into January 1st, 2024, you still have your money there. You understand? Because the balance would always roll over. You know, that is because it's a balance sheet related account, right? So another example is your inventory balances. Another example is your receivable and payables, those that are owing you, right? When you move to January 1st, the system will still show you that they are owing you unless they pay. If they should hold you for a period of 5 years, they will still be your receivables, right? And likewise, those that you are owing, a couple of other ledgers like that. So that is just also what we are just trying to identify to us. We've explained to us what the chart of account or general ledger is, right? And we've explained to us the type that they are primary. We have two primary categories, which is income statement and balance sheet by nature, right? And we equally have here, what we tag as a feature of a general ledger account. So when you call, what would warrant to call something a general ledger account? It must have, at least two of these three features that we've highlighted here. Number one, it should have a ledger code, that should be unique, to each category, right? That should be unique to each category. Uh, so a GL code refers to a unique numeric code, and it's alphanumeric in some cases, assigned to individual ledger accounts so as to make it different to other ledgers. Right? Take, for instance, we have a code called 10,000. The code is starting from 1. It's a 5-digit code, that is for attributed to motor vehicle as a cost ledger, right? We have what we call it, that's a ledger code, right? So take, for example, the following expense that we mentioned, right? So when it comes to, for those that are accountants, they understand that, okay, for you, for some softwares allows for account codes, right? So that following expense, it needs to have a unique code so that when you want to post, if you can't record the ledger name, you can always, record the ledger code, right? And we equally have that being put aside, we have what we call ledger description, right? Individual ledger must have its own unique description or call it account name so that I can always name it following expense. I can always name, another expense line, maybe transportation expenses. You understand? So transportation expense is automatically different from following expense, right? So as an organization or as a business owner, you can always, identify individual, activities that you do in your business and create each unique ledger code, right? Ledger description for them. And the most important here, which is the third one, is what we call account category, right? Account category refers to the account category that the ledger account belongs to. Take, for instance, the ledger account you are trying to create or you are trying to identify. You need to ascertain, is it a revenue? Is it an expense? Is it a current liability? Is it a non-current asset or fixed asset in nature? And this is where, for some of us that do not have deep accounting knowledge, although QuickBooks Online is very easy to use, so you might need to reach out, to someone with an accounting knowledge in this case to ensure that your ledger account is well created, because it will be a total disaster, right? If you have a ledger that should be reporting as your sales, as your revenue that you made within a period, if you had created it maybe as an expense, it will be so wrong. Your report will be so wrong, right? So the most important part, of your accounting system is your chart of account, is your ledger account, right? So if a ledger account has at least two, which the most important is the account category, followed by the account name that you must properly give it, so that for any other person that wants to post, or when you are seeing it as a report, you have an idea what that ledger is created for. Then in most cases, ledger code. So these are things that are attributed, to each ledger account, right? To each ledger account. So I would now move quickly to, now let's now look at examples of what our chart of accounts looks like. And I'll mention one thing to us that we need to equally take note, right? We'll be creating chart of accounts. We'll be creating, accounts ourselves, just after this screen, right? But this is what a chart of account looks like. Now, to my left, you have the GL codes. You have the account description, which is the account name, right? Then we have what we call the account category, right? Then here, just to explain, to make this better known to us, we have what we call, the type. Is this, for us to identify those that are balance sheet accounts and those that are income statement accounts primarily, right? So one thing you will notice is this. Firstly, when you want to create a chart of account, right? When you are being told to create a chart of account, you need to understand that a chart of account or a ledger account, is primarily in two types. It falls in it could go in two types, right? The balance sheet and the income statement. We've explained, the differences between these two to us, right? So when you've identified that, you need to now say that, okay, for my balance sheet account, what are the categories? You need to identify the categories you have under balance sheet. You have non-current asset, which is equally tagged as fixed asset. We have the trade receivable, right? We have cash and cash equivalent for cash and bank related, to maintain all your cash and bank related ledgers that you would have. Payables and all equity, income statement. We have your revenue, the sales that you are making, you have other income, you have cost of sales, you have administrative expense, right? And you could have two or more ledgers, right? Two or more ledgers that are within these categories. Take for instance this cash and bank. You can see here we have a bank called GT Bank, right? We equally have another bank, let's say Zenith, let's say Petty Cash, let's say some other bank related ledgers that you might have. These are different ledger accounts that falls under the same category, which we call cash and cash equivalent, right? In some cases, they call it cash or bank. Do you understand? But you need to note that in as much as they fall within the same category, there is need for you to identify ledger account codes for them. Ledger account codes. So GT Bank could have its own ledger code within your system. Zenith Bank would have its own ledger code within your system, right? And you would see towards my left here, you see that for each category there is a unique code. You see, and there is always, you need to establish a range to say that, okay, any non-current asset that I have is starting from code 10,000. It's not compulsory that your account code will be 5 digits. Some companies is 4 digits, some is 6 digits, and so on and so forth. But for the purpose of our own training, we said, okay, our ledger code will be 5 digits, right? So now, motor vehicle non-current asset is starting with 10,000, right? So for anything that falls under non-current asset as well, would always start with 10,000. So now we could now say that we want it in multiples of 10. So when we have motor vehicle cost is 10,000. When we have another ledger account to cater for accumulated depreciation, it is what 10,010. So let's say we are to have a new ledger account that falls under non-current asset again. If it's because it's a multiple of 10 in our own case now, simply means the next ledger account, under non-current asset, let's say it's plant and machinery. By the time we come here to create plant and machinery, so the code will be 10,020. If you have another ledger to it will be 10,030. It falls within non-current assets. So it's a range. It should fall within that range. because the coding needs to be uniform. So likewise, if I come a cash equivalent, you can see starting with 13,000, 13,010, right? If you want to go to the, if you are to go to the next ledger, let's say we want to come here to create Zenith Bank as a ledger, right? It simply means the code will be 13,020. You understand? If there's another ledger account, let's say we want to create, a ledger for Polaris Bank, that will be 13,030. So is a multiple. So the first thing you need to identify is what category this ledger that I want to create. What category does it belong to? Once I identify it. So what's my last code? My last ledger code in that category. Once I identify it, I now look at how the coding, how the nomenclature is. Then it gives me an idea of what the next code should be for this new ledger I am trying to create. Right? We'll do that together. And we'll share this slide with us basically so that we can always, reference it, for our own practice. Right? And we gave tips, on how you can create, a chart of accounts, for interview purposes. Right? So you could go for an interview. Let's say you want to get a bigger, accountant related job. You could be asked to say, to chart an account. And we've seen people fail this, severally. So it is good when you call yourself an accountant and you call yourself a software, accountant majorly, you need to know how to chart an account. You need to be able to sit down and draft out, a chart of account for a company that is into manufacturing, right? For a company that is into, maybe repairs and maintenance of vehicles, you know, for any company whatsoever in any industry. So, but these are just basic tips that are unique, that is relevant actually across board. So, firstly, saying ensure you divide your GL account into two types, exactly what we've done, a balance sheet and income statement. So, establish the various ledger categories, which is the account categories here. You need to establish that, right? Then assign specific GL code range to the account categories. So, you can say, for example, from 4,000 to 49,999, is basically reserved for revenue accounts. You can say that, and you can say that, from 5,000, from 50,000 to 59,999 is reserved for cost of sales. 6,000 to 999 is reserved for expenses. So it simply means your expenses will start with 6,000, 60,000, right? 60,010, 60,020, 60,030. As the expenses increases, right? Right. So the fourth here is saying you should spread and assign the code to the respective individual GL account that you must have identified. We've mentioned that. I've walked us through that. And ensure all codes are uniform across all the categories at the end of the day. It simply means if a revenue account is starting with 40,000, as the GL code. So I expect, we expect that all the revenue accounts should start with that 4. So you shouldn't have a case where you have a revenue account that is starting with 40,000 something, and you equally create another revenue account and is starting with 10,000 something. You've not done well. You understand? As an accountant, that's an absolute, failure on that part. So you need to ensure uniformity. You understand? You need to ensure uniformity in the way you create, your records. And that is how, you create, a chart of accounts. So before we go on a short break, so we'll create one or two, ledger accounts here. And if you have any question for me, as we proceed, you can always drop them, right? And I hope you can hear me clearly and you can equally see, my screen. So if you're having any challenge, feel free to let us know. We'll see where we can assist, and so I hope we all are together. So let's create a few ledger accounts, then we go, for a short break, right? Uh, okay. So let's see. So let me know if we are together, if you can hear me clearly. So let's create, a few ledger accounts within QuickBooks Online accounting, software. Okay. So to do that, to create a ledger account, we shared with us a document called class exercise, right? Class exercise. So the class exercise would actually be a guide for us. We have some exercise, some activities there, to help us with one or two activities that we'll be doing with respect to this training here. Okay. So one moment. Okay. So now let's go to our chart of account screen. Okay. So let's navigate to our chart of account screen. Right. So our chart of account would always be seen, right? From this settings button, right? We have chart of accounts. We have chart of accounts. So again, from our QuickBooks, application, from this settings button, we go to chart of accounts, right? And the system opens up, our chart of account screen for us. Okay. So now this is what, our chart of account screen looks like. As you can see, we have a list, of ledgers that come, that had been preloaded by QuickBooks already. So we have default ledger accounts that had been preloaded by QuickBooks. So we can always enhance or modify this, to suit your own need or your organization's need, which we'll be doing similarly. And you should note also, like we said, that QuickBooks Online, doesn't come automatically, right, with assigned GL code. We have to go and enable GL code under our settings, right? And as you can see from this column here, we have, this is our chart of accounts. We have the ledger account code column, we have the account name column, and we have the account type column, right? And we have some couple of other columns here, balances and all, right? And we have the action column where we can always, edit any ledger account, or even generate a quick ledger activity report as it relates to that particular ledger account. Okay. So, but so ordinarily we'll be doing two activities, but we'll be doing one basically here, and we'll be giving us, assignments. Do you understand? So that when we are practicing from our hand, we equally get to do, those stuffs. So we'll be creating a few ledger accounts here, as you can see. We'll be creating some ledger accounts, expenses and all, right? And we'll be creating some, bank and cash related accounts. But to start with, we'll be creating, an account called borrow expenses. Borrow expenses. You know, like I mentioned, in creating ledger accounts, there are some steps that needs to be followed. Ordinarily, our chart of accounts here does not have existing account codes, meaning we need to assign account codes for them, right? And we can always go with, this structure that we have identified here, right? To say that, okay, our non-current asset is starting from 10,000, right? Our cash and bank related, ledger account is starting with 13,000, So now the first set of ledger we have here in with reference to our class exercise, right? With reference to our class exercise is one moment. Okay. Is with respect to borrow expenses. So it's an expense, right? So to create an expense, let's check, we have a couple of expenses, that have been, added by QuickBooks already. You can see we have some expenses here. We have wage expense, we have utilities, we have uncategorized expenses, some expenses are here already, but then we want to create an additional expense, which is called borrow expense. So what I need to do here is to click on new, right? Is to click on new by my top right here. You can see new. I want to create, a new expense. So the first thing here is the account type. What is the account type, for that expense I'm trying to create, right? So here I would come here is an expense, right? So what form of expense is it? You need to note that the most important thing here, is of course this account type, right? And equally the detail type as well, right, is equally important. So it determines how the account you specified will be reported for. Okay. And based on the detail type that we must have selected, the system gives you a short description of what that category you selected, what it does for even those of us that are not accountants. So I want to create an expense. So what form of expense is this? So this is borrow expense. Okay. So okay, so we want to create that ledger to accommodate couple of uh activities that we do, with we incur with respect to that borrow. So okay, I'll just come here and call it utility. Okay. So utility here, the name borrow expense. I will just paste what I've copied, right? I want to do a quick copy and paste. So expense, the GL code. So I want to start, I want it to be the first line item for my GL code. So I can easily say, okay, this is from 6,000, 6,000. So that's my GL expense, right? And okay, description, if I have any form of description, additionally to say, oh, this ledger is created to record expenses relating to borrow, so that any other person that sees that ledger within my unit who can easily know what needs to be posted, the main reason why that ledger is being created. Do you understand? So that gives a better insight. So, but it's not a compulsory field anyway. So it's just if you want to add some additional level of description, right, to what the ledger is meant for. And you can always specify if the ledger, is a sub account, or not. So you can have a ledger account that is called a parent account, and you can equally have sub accounts that are reporting into that parent account, right? So just know that QuickBooks Online has that feature. But we want to create this as a primary account. We are not creating it as a sub account, right? But we can create it as a sub account also. But for the purpose of this training, we want to create individual accounts uniquely, right? So it's a parent account on its own. So I want to do is either you do save and close. When you do save and close, then the ledger is created. So let's purposely do save and close so that you can see the effects of what we've done. So what we've done is to create a ledger account, right, called borrow expense. So from our class exercise, we've been told to create this ledger account, and we've been told that okay, uh, we've been told the account type automatically that it is an expense, and that is what gave us the idea of the code we had to assign to it, right? Okay, so borrow expense. So let's go back to our QuickBooks application. Let's locate the ledger account we just created. You can see borrow expense, right? You can see borrow expense with the ledger code 60,000. Okay, so that is very good to go. Okay, so now let's create quickly the other ledger account, making reference back to my class exercise, right? The other ledger account is security of station expenses. I will copy that. I'll come here again, quickly click on new, right? So now I will move faster, right? This is equally an expenses ledger. Okay, so also call this utility, because of time. That's the name. So the code, what code will it be? Right? You can also guess. So the code would be 60,010. 60,010. Remember, we've agreed it should be in multiples of 10, right? And the first expense code we highlighted started with 60,000. So the next one should be 60,010. The next that will come after this, if it's an expense ledger, will be 60,020. right? So instead of doing save and close, I'll just do save and new, so that I can have a new screen to myself, right? So electricity expense, okay. So electricity expense, quickly. So expense, electricity expense, utility. So the ledger code will be, you know, 620. That's fine. Save and new quickly. Generator expenses. So what we are doing here is we are creating a ledger account, so that at the end of the day, we are able to post, transactions into these ledgers, and they can translate to our report. Take for instance this electricity expense, right? Take for instance this electricity expense. Anytime we are incurring anything, generator expenses rather. Sorry about that. Generator expenses. So anytime we are incurring anything on generator, any repairs or anything, can actually be posted into this ledger, so that at the end of a certain period, or at the end of the year, we can see all what we've incurred on generator expenses, right? So we've created that, maintenance and general repairs as well. So let me have that here. So detail type 2, we can select repair and maintenance. So the code 60,400. You can see I'm maintaining uniformity, right? So plant and PPE, which is non-current assets, I'll come here, call it fixed assets. Okay, call it fixed assets. Would equally call it, non-current assets as well, right? So either, of the two, would easily work. Okay, so I want to call it fixed assets. The name here, plant and equipment at cost. So this is, machinery and equipment. So the ledger code, what ledger did we? Okay, this is starting with 10,000. So we come here, right? Start this with 10,000, right? And yeah, save and new. That's fine. So we move to the next one on our class exercise, accumulated depreciation ledger, right? So we come here, okay. Okay, plant and equipment. Okay, we could do this. One moment. Okay, so plant and equipment at cost. So this should be accumulated depreciation. Okay, shorten it to be that. The account code, on 10,010, right? Which is the next on the on so leasehold property costs. So I would just because of time, I would proceed to create other type, which is the other current assets and bank and cash, right? So let's just do that because of time. So we'll be creating the others much later, right? So this is other current assets, right? Other current assets. Okay, prepaid rent. Let's create prepaid rent. So other current asset prepaid expenses. This is called prepaid rent. So other current assets is here. What do we have for it? Okay, so we could start that with 15,000, right? We could start other current assets with 15,000. Current assets start with 15,000 as a code. Save and new. Then okay, go back to my class exercise. Okay, so let me easily create bank and cash. So I know this, I would come back to create short-term loan and this leasehold. So let's just create bank and cash. Let's create GTB. GTB. Come here. So if there are any questions, please let me know. Drop them. Feel free. So my account type as well should be cash and cash equivalent, right? Cash and cash equivalent. Yes, bank account. So I'll come here. What's the name? Locate my PDF class exercise as well. So the name is GTB, GT Bank. So I'll just create that. Come back here. Just create GT Bank. So the number they are talking about here is not your regular account number, right? Your regular bank account number, no. But is your ledger code, your ledger account number. So in this case, we agree here that cash and cash should start from 13,000, right? So I would navigate back to. So what I'm using to navigate there is Alt and Tab on my keyboard. So it makes it much more faster for me. Alt and Tab on my keyboard. So I just switch screens easily, right? So here, I think it's 13,000. Let me be sure. Yes, 13,000. Okay. So that is fine. Save and new quickly. Zenith Bank. Okay, we have Zenith, we have Sterling, and we have cash on hand. So let me just do that. Okay, so Zenith. So this is 13010. Save and new. So we have Sterling, right? Let me confirm that we have Sterling Bank. Okay. So Sterling Bank. Okay, so this is 13,000 020, if I'm not mistaken. So save and new. So lastly, we have cash in hand. Okay, so cash in hand. Pay this to be cash on hand, right? Okay, so cash on hand, that is 13, should be 13 40, right? Okay, let me confirm that. Okay, should be 30. Okay, so let's look at, so coming back to our chart of account, let's see what we've created. Right, let's see what we have created so far. Okay, so let's refresh the screen. So I can eradicate this. So you can see that the ledger accounts that were newly created already have their codes, right? They all have their codes already, right? You can see this is our cash, and cash equivalent, right? You can see this is our prepayment account that we created, and so on and so forth. So now the rest of the exercise is now that we are now mandated, there is need for you to now assign codes to all of these blank, account that does not have codes. And we know that should be very easy for you to do, right? All you need to do is to edit. For instance, this current asset here, the first ledger is 15,000. The one that is missing here, I'll just come here, edit, and make it 15,010. Right? I'll just come here, specified a ledger 15,010, and I'll come here to save and close. So if you check, if anybody, any accountant or what have you, or anybody comes, to this system, they know, yes, I've done a good job. By the time, once I'm done, highlighting these item codes for all of these, ledger accounts, right? So it's that simple. So what you will be doing for us is there's need for you to highlight, individual ledger codes for these individual ledger accounts, right? So it is an assignment that we all need to do, and we'll be requesting that you send your chart of account report. You share it with us at the end of the whole thing. You understand? So these are some of the things we'll be basing our assessment on. So please have that noted, right? But all in all, that is how you get to chart an account. It's as simple as that. It's as simple as what I have run us through, right? Charting an account is as simple as ABC. So remember, we took it from how ledger account, what ledger account is primarily, and what you need to note right? How you need to create ledger account, how you need to chart account, right? That is how, easy it is to, to chart account and to create, this ledger account. Okay, so I have a question here saying, uh, okay, that is the chart of account format the same for all business type? So the answer is no, actually. It's not the same for all business type. But the whole idea is the same. Take for instance, if you look at, so this structure we've identified here, right? Is just a standard, right? Some companies have 6 digit chart of account. Some companies chart of account is alphanumeric. Is a combination of numbers and letters. Some, we consider balance sheet first in our chart of account here. Some would consider income statement first. In fact, their revenue will start from 10,000, you know. So it's dynamic. But you should just get the concept that, okay, irrespective of how you want to do it or the way you want your coding to be, the only thing that would differ is the coding. But all of these things are highlighted. Non-current asset, balance sheet, income statement, they are the same, But your coding, you could say, okay, I want in my income statement, and it only makes sense, when you are doing your balance sheet, you have your non-current asset is starting first, and every other thing is fine like that, But in different companies is quite, there are one or two differences, but just understand the concept of charting an account, right? So it gives you, so if you are charting an account newly, you can follow this format. You can even follow your own format. You can say you want to place income statement first. You can say, okay, rather than receivable starting with 12,000, your own receivable, you starting with 15,000, or it's starting from 20,000 to 20,500. Do you understand? Specify that range. So there's no one way thing to it, right? But importantly, the chart of account is the most important aspect of any system. If you get it wrong from your chart of account, then you've gotten everything wrong, absolutely. So that needs to be noted, right? That needs to be hugely noted, right? So that is how you get to create a chart of accounts. So yeah. So the next thing we'll be moving to, we are going on a break, right? But the next thing we'll be moving to is now that, okay, as a company or as a business, we've created our company, we've created our, we've done some default settings, we've done our chart of accounts, right? So the next phase we now want to go to is, how do we now, set up our application to accommodate our items? Let's say we are into buying and selling, or we do service related, activities or services. So how do we maintain this thing into the system? You understand? How do we go digital, with these things within our software? What are those peculiarities we need to note when dealing with items in a system, right? How do we create customers within QuickBooks Online and how it works on other systems? How do we create suppliers? What are those things we need to note? You understand? What are those important and germane things we need to note? And when we do this, we now transcend into transactions. And that area, believe you me, gets even much more interesting, right? So we now need to note, okay, now how do we do suppliers related items, transactions? How do we do purchase order? What is a purchase order document? What will happen when we raise a purchase order document? When an item is being received physically, or when a service is being rendered to us by our vendors, how do we capture that? What is value added tax? How does VAT coming into some of these transactions? How do we record for it? Right? You know, all our suppliers related transactions, payments, and every of those things, these are what we will be looking at, right? We would equally be looking at customers related activities. When we are sending quotes or sales orders within the system, what does it mean? What do we need to note? What do we need to note with respect to invoices, right? What is the relationship between invoices and credit notes, right? How do we reverse invoices, right? When invoices or when there is a return, let's say we are into buying and selling, when there is a return of items, from our customers, how do we record this into the system? What's the translation like? Same thing returns to our vendors due to damaged item or what have you. How do we get to do all of this? These are stuff we'll be looking at when we come back, from our break, right? So we'll be going for a break. Is this is So let's go for a short break. But seriously, you wouldn't want to miss the other part of the training, right? And if you have any question, like I said, please feel free to drop them, right? And as you can see, the training is a detailed training. We won't say, okay, we just want to rush you. No, 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 no. The training in question that we are looking at, that we started and will be, continuing, is actually, you see that you would have gotten value for money, even with this little thing we've just looked at or discussed or done, collectively. And I am sure at the end of the day, when we reminisce on this video, when we go back to these materials again, some of these things will make more sense to us, and they become much more beneficial, right? So we'll be going on our short break. And will I please confirm when will we be back, from our training, so okay. So we'll go for 30 minutes break, basically. Let's go for 30 minutes break. Let's go for 30 minutes break. So we'll be back by 2:30. So if that is fine, yeah, we'll be back by 2:30.
Yeah, so
So
30-minute break is fine actually. So,
okay. All right.
just-
All right. So I announce a question before we quickly go. So do we need to code for all the accounting charts before we can begin posting? Yes, it is best. Yeah, it is best. It's not like you can't start posting, actually. You can, but it is good, for a system you want to use. It is good you code your system. Accounting systems is like car. They are like vehicles. When you are sure that your vehicle is put in proper shape, right? You've cleaned the oil is being serviced and every other thing. You can ensure a smooth running. So first thing first, you need to assign the codes, so that by the moment you start transactions, you want to move to report. You don't need to bother yourself about a couple of stuffs again. So that's how it works actually. Okay, so we'll be back by 2:30. So let's walk around. Let's release those fatigue. I know it's not easy sitting down, listening and watching some of these things. So, and for some of us, we can, if we have that time, we can practicalize one or two things, on the side. So please, when we come back, it promises to be much more, interesting and entertaining. All right. Thank you so much. So I'll be on the background. If you have any question in the meantime, just drop it for us. We'll attend to it. But then we'll be back by 2:30. Thank you so much. See you on the
Thank
second
you.
part.
Thank you.
Uh, First, our short break, was worth a while. Okay, so let's quickly, go into, other activities we have lined up for today. Right, so it promises to be much more interesting, like I said. Okay, so let me share my screen. One moment, let me sign up from these other applications. Okay. All right. So I'm sure should be able to see my screen now. Okay. So there's something I want to show us also. Thanks to that observation from Abiodun. Okay. So Now you see there's a little change here. So you can see that my class exercise, the class exercise that was actually shared with you, the one I was earlier showing, does not have GL codes and all, right? So now it simply means if you'll be practicing right from your hand, you need to use some of these codes, that was specified here. So the only difference, or one of the differences here, is just that uh, the head, initially we use 60,000 whatever, right? But then here it's 70,000. So just to make it much easier, right, for you. So when you are practicalizing, or for anyone that must have created any ledger account, you can always edit it and assign, this range, right? This range, to it. And I think the only difference we would just have is just this expense. Yeah, it's just this expense. And okay, okay, and I think cash and bank as well. So please, in our own assignments on what we'll be doing, you can always make use of what you have in the class exercise document that you have, right? So if I want to, conform with this too, it's very simple for me, very easy for me. All I need to do is just to go and edit a couple of ledger accounts I've created, right? And how do I edit? It's very simple, right? To edit that, so quickly, if I come here, if I come to my ledger chart of accounts, for my settings here, I'll come to chart of accounts, right? And from here, I can easily, locate my respective ledger accounts, expenses, come here, and edit accordingly. So to edit the ledger, right, I can easily, I click on this option here and click on edit. So when I do, so from here, I can easily, depending on, so let's say I want to call this electricity expense, just to be sure. Do we have any electricity expense created here before? Yes, we do. So just edit this and give it the right code, which is 70,010, right? So you can always make use of what you have, basically. You can always make use of what you have. So it doesn't, it still works. Okay, so that's just to bring to our attention so that we'll be on the same page. Okay, so now before our break, I mentioned that we don't want to do, the major activities. What we've done is the primary setups. Do you understand? So now we are getting into the major activities, right? And where we would have to do with item correction, suppliers related transaction, customers related transaction. Because the way it works in the software world is this. Every company, right? Every businesses, right, must have one or two things that they do. Is either products that they sell, right, or services that they render. Is either a business is selling products, items, right? Or they are rendering services, right? So these two things that I mentioned in the context, of a software is together could be called an item, right? Could be called an item. So that is why whatsoever it is that you do, whatsoever it is that you do, right, you need to come into the system. Let's say when you invoice, if you want to invoice any customer, right, on anything at all. So such nature, of activity or product that you invoice customers for needs to be created as an item, and which is what we'll be doing here now, right? So when you are configuring a software or when you are working around the software, so the trend is you need to create your organization related informations, which we've done, right? Some primary defaults, which we've done, right? Then you move to chart of accounts, right, which we've done as well. So when you create a chart of accounts, right, and you are sure your chart of account structure is okay, right? Then you now move to creating items, right? So the item in this case is what the organization is basically into. What, those line items that they invoice their respective customers for, right? Or those things they get to buy from suppliers, right? So that is important. Even before we recognize, vendors in the system or customers, right? You can create customers first, suppliers first, but ideologically or ideally, it's best you move into, the items proper, right? And so that is what we'll be doing. We'll be going to the items module. We'll be looking at a couple of things that needs to be noted when creating an item, right? And how it works in the business world for those of us that are accountants and those of us that are non-accountants, right? So we'll be taking it slowly. But before I proceed, you know, before I go further to create, items, you would realize that from my ledger accounts here, you know, with reference to my class exercise, I have some ledger accounts that are primarily related to, the day-to-day activities of the organization, with respect to sales, with respect to invoices. Because you see, this income account and this cost of sales account, this direct cost account, is directly related to the items. So before I create my inventory item, you can see why chart of account is important before you even proceed to inventory. We created a couple of other inventory items, right? But we didn't create these ones. We didn't create revenue. We didn't create, cost of sales, right? And revenue ledger, for those of us that are non-accountants, is just saying when I invoice, a customer, when I sell something, anything you do, your business does, like I said, it translates to, a financial, an accounting entry. Those that are accountants would understand what I'm saying. But when you sell something, a ledger account that you have created on your chart of accounts, would be affected. When you sell anything related to phones, like we have here, it will go to this ledger account called phones, revenue for phones. When you sell laptops, right? Because this test organization now, with reference to our class exercise, is into buying and selling on phones and gadgets. So they do phone repairs, they sell laptops and they buy gadgets. That is why, and we want to see how much it is we are making from selling, phones, how much it is we are making from selling laptops, and how much are we getting from repairs. It could be repairs of phones or repairs of for laptops. These are activities that we do, and that is why we have them highlighted on the face of our ledger, right? Okay. So now let's now create, those specific ledger accounts before we proceed to creating items. And I will show us why it is important for us to create those ledger accounts first, right? Before coming to creating the other line item. So yes, the very first thing is revenue, or what you could call income, right? In some cases. So we want to create a ledger account for this revenue called revenue for phones, right? So I will go back to my QuickBooks here. Similarly, what I have done earlier, right? I'll just come to new. I'll come to new. My account type, I need to look through. I need to look through here. So it's an income account, which is otherwise called revenue. So income simply means anything I'm selling, basically, or any activities, I'm into, right? Anytime I sell, this is where it will be reported into. Okay. So I'll come here, revenue for phones. What is my ledger code? 40,000, 10. You can see this is in line, with that slide we shared, which says, revenue, our revenue structure is starting from 40,000, right? So I would come here and I will specify 4010. So when I do that, I want to do save and new because I want to create another revenue line, right? So this is revenue for laptops, right? Simply because when I do, these transactions, I want it to report accordingly into their correct ledgers. And you see how some of these things works, right? You see how it works as we proceed. So I want to create, another revenue line, for repairs. And the beauty of for doing this is that as an accountant or as a business person, we want to be able to see how much, you understand, irrespective of all the items that we are selling. If when I look at my income statement, when I look at my profit or loss to see when I'm making profit or or my business is making loss, I want to see the total amount I've gotten from selling phones differently. I want to see the total amount I've gotten from selling laptops differently. Any segment of my business. And if I want to see some of these things, I need to highlight them on the face of my chart of accounts because I need to specify them. Because if I don't specify them, I cannot generate meaningful reports as it relates to those things, right? So that is the reason why I had to come and create that, you know. So let me quickly create, cost of sales briefly. Okay, so here, cost of sales, this is it. So cost of sales are just direct costs. So any direct cost that affects, you know, our our activities, you know, to say that okay, if there's any maybe the cost of items that is being bought, the cost of items, the portion from the value of items that I have sold, any cost that is directly attributed, to making that sale, right? To carry out that sales, that invoice that I was able to give to that, customer is tagged as my cost of sales, which is equally direct cost. It's quite different from your normal administrative expense, right? And this is what the system would use in getting your gross profit. The system will do income minus cost of sales in order to get your gross profit, right? So, for those of us that are accountants, I understand we understand that part already. So now let's create cost of sales ledgers. So cost of sales ledgers. So let's say supplies and materials. So here, so I want to be able to see, to identify any cost that I incur based on phones, directly on phones, that I'm selling anyways. So phones that is being sold, I want to easily see them, right? Save and new. Then I come here again, cost of sales for laptops. Okay. So this is ledger account 50,020. Remember, uniformity is important, right? I'll come here and I'll do save and close. Right? I will do save and close. So, and if there is any form of other direct costs that I might have, I can always create them, as cost of sales, right? Remember, cost of sales are those direct costs, those costs that you incur. So, for instance, before I could sell these items, so those costs are directly affected, you know, by the sale of that particular item on hand. So those are what we call cost of sales. And I understand, and I want to believe we understand what we meant by income as well. Okay. So now let's create inventory items. Let's create inventory items. Okay. So to create inventory items, we can do that from different modules, right? We can do that from our sales module here. You can see we have sales module, product and services, right? Products and services. Within QuickBooks Online, that is what you refer to as your inventory or your items module. So what you get to do there is you get to create all your items, be it physical items, be it service items, right? You get to create them on this, screen. You get to create or maintain them on this screen. So now, like I said, as a company, if you come through here, so we have some inventory items that needs to be created. We have inventory items that needs to be created. Some are physical in nature and some are service in nature. Now, what is the difference between these? So now, in creating the inventory item, the thing I need to do here is to click on add a product or service. So by doing so, you can see that the system has four primary segments of inventory items I can create. I have the inventory itself, right? Which is the items that we buy and sell, and we want to monitor quantities, you know, on those items. Talk about our laptops, our phones that we are dealing, we are buying and selling. When you buy laptops, you want to monitor the quantities, right, that you have on hand that you've bought. When you sell, you want to monitor the quantity that has been sold so that you can see what you have remaining on hand, right? That is what QuickBooks, is saying when it's saying, because it's asking you a question here. What nature of item do you intend to create? Do you intend to create an inventory item? And inventory items are those items that you buy, all right, and you sell. But most importantly, you want to track their quantities, phones, gadgets, and the likes, right? Laptops, which in this case are your inventory, right? And you equally have some items that you likely, probably you are buying them, you sell them, and you don't necessarily monitor their quantities. You understand? There are some items like that. Maybe because they are unit of measure, in terms of weight, and some of those things are, there are some items that falls into that category as well. There are non-inventory items, right? But categorically also, we have service items. Take for instance, if you are, like your firm is a consulting firm like ours, right? Which you will do training. If I want to invoice a company, for a training we are doing, training is not a physical item. You cannot, monitor the quantities, for such items. So they cannot be seen, not touched. You cannot count it, right? So it is best to create such, kind of service, such kind of uh activity as service item, right? Because you are not monitoring, is not something you can't see training, you can't touch training. Unlike laptops that you want to monitor what you buy and what you are selling, right? Then lastly, we have bundle. Bundle is just saying is the coming together of, two or more items. Let's say, for some phones now, let's say some Samsung phones, some of these new Samsung, they don't come with adapters and all, you know, charging adapter. So you might want to say that, okay, as a firm, we are into buying and selling on phones. We know that when we are selling Samsung Galaxy X23, S23, you know, our customers would always buy chargers alongside, or maybe they would always buy power bank. It's a bundle, it's a pool of items that you can add together. You understand? So that when you can make invoicing easy for you. Another example of a bundle, is when you want to buy, take for instance, a desktop, desktop computer system where you have the monitor, you have the keyboard is separate, the mouse is separate, the CPU itself, it's separate, right? And all this together is being called a computer system. So rather than you would have monitor, you have keyboard, you have some of these things, but you can create a bundle for them and call it desktop computer system, so that anytime you are selling such item, rather than having to select monitor, having to select mouse, because all of these guys are different, right? They are different items on their own. So you can just select a computer system if a customer is buying everything together as a bundle. So that's what bundle is, right? But primarily what we'll be doing is more of inventory items and service items, with respect to this training, inventory items and service items. And as you can see here, you know, service items, laptop repairs. We do laptop repairs as a training company, right? Within these are class exercise. You know, they do laptop repairs. If you need to repair your laptop, you come. But laptop repairs is not something you can easily quantify. So you could come and we could look at the level of the damage and say, oh, we are billing you 100,000. And when we are issuing you an invoice, a customer's invoice, you see the laptop repair, you see the 100,000 as a line item, right? So laptop repair, if we are to create such, because it's a service we render, it won't be created as a physical or inventory item per se in the context of QuickBooks Online, right? It will be created as a service item, right? But then when we are creating some of these other, laptops, phones, some of these other items, they are physical items. And By so doing, when you come to QuickBooks Online, they'll be created as inventory. So I think we understand the differences between, when you are creating what you call an item within the system. Always know that primarily items are classified into, your normal, inventory item and your service item. Primarily, your normal inventory item and your service item. And I've explained the differences between these two. So the primary thing you should note is, do we monitor the quantities, for this particular item? Is this something we can count? If it's something you can count, make it an inventory item. But if it's something you can't count, it's naturally a service item. And that needs to be noted, right? So coming back to our class exercise, we want to easily create, laptop repairs. I'll be moving quickly. So laptop repairs, like in my context, is a service item. So I'll click that and the system would open this up for me. So I call it item name. My item name is laptop repairs, right? So my category, let me just create a category here because it's good for my reporting. I can call my category repairs, right? So categories is so now description. I sell this product or service to my customers. Yes, because I want to be able to invoice my customers, with this line item. Okay. So sales price, if I have a default price, that I charge for this service, I can impute it here, right? But if I don't, okay, but if I don't, I can just leave it blank so that at the point of invoicing, I can always specify the amount. So income account, this is very, very important. So the system is asking, anytime you invoice, a customer, on laptop repairs that you've rendered, which income, which account should it be reported into? And remember, we created some ledger accounts earlier. We created some ledger accounts earlier, right? And that is where they had to come in. Remember, that was the reason why I said we should go back to create that ledger first, those revenue and cost of sales ledger, right? So, and as you can see, coming here, we need to specify the correct revenue or income ledger account. That is why the concept of chart of account needs to be properly understood, right? So if I come here, all I need to do is to specify my revenue ledger. You can see revenue repairs 40,030. That is where I want my revenue to go through, right? Likewise, tax. The system is saying the tax the system is highlighting for you here is what we call value added tax that is being charged on sales and purchases, right? It's another concept on its own, right? So as we proceed, I'll be explaining, what VAT, value added tax, what it is in this context to us. But the system is saying that by default, do you charge your customers VAT? If you charge them VAT on this by default, you can just specify the appropriate VAT 7.5, right? You select that, then I'll come. The system is equally saying, do I purchase this product or service from a vendor? Laptop repairs, I don't necessarily, subcontract it out as a company. So I won't click this, But let's say if some vendors get to charge me for laptop repairs also, I can always check this to say, yes, I do not just invoice customers alone. Suppliers also invoice me based on this line item. So, but in this context, laptop repairs, we only render such for our customers, right? It will be different, to be a different scenario if what we are creating is a physical item, right? So I hope that is gotten. So so the only thing I would do here is to come here and do save and close. Save and close. Okay. So now this is what my inventory screen, my item screen is looking like. So I'll come here, I'll click on add again because I want to quickly add, these other inventory items, physical items. So I'll come here, click on inventory, right? The name HPLI book laptop, right? So category, I can add a new category also because I'm here to add that for laptops. The reason for that is so that when I'm generating, my report, categorization is good. I can generate my sales report to see. I can just say, okay, I want to see based on this category alone, based on this laptop as a category. Let me see how all these other laptops have been performing. That's the essence of categorization. We'll understand that better when we move to reporting. Okay. So yes, inventory asset, this is fine. My inventory ledger is fine. So description also here, I would paste the same description, HP laptop, HP Book laptop, right? Do I have a default selling price? If I don't, I'll just leave it, right? And I'll come here. The system is asking, which income ledger would be applicable. Okay, I would look at this. Let's see. Okay, sales of product income. Okay, so there's something I've omitted here before. Let me use sales of product income. Then we need to go and enhance, our chart of accounts so that we can have, we'll be able to select the appropriate ledger here. You can see the system is only showing us sales of product income. So other ledgers that were not, attributed to this account detail, right, is not displaying, would not display. So we'll go and enhance that in our chart of account. Okay, our expense, okay, our cost of sales. Anytime we incur anything on laptops, it should go to this ledger. That is what that means. So our VAT 7.5. Preferred vendor, if I don't have any preferred vendor within the system, I'll just leave it. It's okay. So let me do save and close. Okay, initial quantity on hand is 0. We don't have any quantity on hand specifically. Okay, so the dates, specify the date here. So let's say this is, so we'll come back here. So do you have any other points? We don't, for the purpose of the training. Okay, so this is what we'll do. So let's quickly go to our chart of account. I want to go and edit those revenue ledgers, those income ledgers. So there's a certain account type that they need to be configured in, so that we can always have the luxury of attaching them, to their right items. So if you have any question, please drop them. I would go over to check them shortly. So this is sales of product income. So this should be correct. Okay, this should be correct. Save and close. Yes. Okay, so I would check that back. Let's see. Let's see. HP Book laptop. I want to edit that. Okay. So, should be revenue for laptop rather. Sorry, let me go back one step. One moment, please. One moment. Yeah. So the second question, which says the system allows you, delete a ledger account. Yes, the system does allow you delete a ledger account. But note that you would only, be able to delete a ledger account that does not have any activity, right? If a ledger account does not have any, it's different from a ledger account that is having zero balance. A ledger could have zero balance, but you've posted one or two things there, right? Maybe the total inflow you've posted there has equaled, the total outflow, be it you've reversed or you've done anything. Do you understand? But once there's any form of activity, any form of record in that ledger, the system will not allow you delete. So the best you can do is to make it inactive. Such, such record can always be made inactive, right? Such record can always be made inactive. So that needs to be noted, right? That needs to be noted. Okay. So I'll just take the VAT again. If your VAT is not showing, you need to come to the VAT module here. From the VAT module, right, the system would give you like a small setup screen where you can click on next and you can select that, oh, you are running a monthly VAT reporting system. And you select your first month, most likely in our own case, January. So when you do that and when you finalize, VAT should be dropping, henceforth for you. Okay, so let's just create briefly the other inventory related items, right? If you still have any other question, please feel free to drop it for us. So click on new inventory. So the inventory item is iPhone 13 here. Okay, iPhone 13 category. We do not have a phone category. Let me purposely create that as well. So quickly, I'll be moving so fast because of time. Phone, okay, time is fast spent already. Yes. So our phone should be reporting into revenue for phones, right? We do not want a default. So yes, we have VAT, and purchases information. Anytime we sell phones, it should go to cost of sales for phones. It is important, very, very important. So do we charge VAT? Yes, we are being charged VAT by our vendor as well. So for this, so as at opening balance as at what date? So let's just select 31/12. So we are assuming, that we do not have any opening quantity. This is the first time we are doing, transactions within the system. So save and new quickly. I want to create Samsung S9 Plus. Have that created. Category phone is there for me already. So opening quantity is 0 as at that date, yes. So description, of course, the ledger accounts revenue for phones is vatable, okay. So if it is not vatable, if the item is not vatable, you just put no VAT here, right? Okay, so uh, purchase tax as well, 7.5, expenses, cost of sales for phones, save and new, okay. So the system wants me to enter my dates. Okay, done that already, save and new. So the next item, Samsung S22 Ultra is what I'm creating next. Category is equally phone. So never mind, I'm moving fast just because of time, but it's just what I've done, earlier. Okay, so revenue for phones. Okay, so yeah, it's a vatable item. Expense accounts, of course, it should go to phones as well. So I'll do save and new. Now this is a laptop, HP Pavilion. Okay, so my category is laptop. So my opening quantity is equally 0 here. My description for that item is being stipulated. So yes, revenue for laptops is what we should go to. Is a vatable item. Okay, purchasing information, well highlighted. The cost of sales for laptops, that's fine. So I easily want to do save and new as well. So then lastly, the last item here, you know, is a gadget. Seagate hard drive, 500 gig. So let me create a category for uh, say gadget or accessories. So quantity on hand is 0 as at that date as well. So if there's any quantity you have on hand as at that particular period you are creating it, you can always specify actually. So I have this description. Okay, so now we have the option of creating a revenue line. You understand? For gadgets. So let's quickly do that actually. Let's quickly do that. Revenue, for gadgets. So the last code should be something around 40,040. Yeah, hopefully should be 40,040. Yeah, that is right. Okay, so VAT, yeah, it's vatable. Okay, cost of sales as well. Okay, for proper reporting, can do that as well. Cost of sales for gadgets. So this should be 50,040. Okay, let's leave it at that. Okay, so here, because this is the last item, I just want to do save and close. And now I've been able to create, my respective inventory items. I've been able to create my respective inventory items, and here we have it. Here we have it. So under individual categories, right? Under individual categories, you can see the phones, the laptops, the gadgets have all been created. Okay. So that is how you create inventory items. That is how you create inventory items within the system. So the next thing we want to do is, yes, we've created our items. We are fine. It's good. But then these items would then be supplied, you know, by some people, which translate to our vendors now, our suppliers. So there is need, because the items will not just come by matter of magic, right? So you need to create vendors within the system, or suppliers, so that when you are buying that item from them, you can always process it, right? You can always recognize it. And when you are paying your vendor, you can always process it as well. Vendors payments, and before you're able to do transactions, you need to create your vendors within the system, right? You need to create your vendors within the system, which is the next phase we are getting to. So we need to create quickly, we need to create some suppliers and some customers, so that when we want to do transactions now, so those things are much more, they would make more sense to us, right? So the question is, using QuickBooks Online, how do you create suppliers? That is the next question. Using QuickBooks Online, how would you create suppliers? So I think we have a couple of other questions here, saying if inventory price have been included and the price changes, how do we go about the change in price on the system? Okay, cool. Uh, so yes, how do you fix multiple price for a product in case the product price has category based on? Yes, very good question. So we'll run us through that. We'll get into that shortly. But primarily, the easiest you can take notes here primarily is that if you want to change a default, item price, sales price, by default, the default one, you can always edit that item. Actually, when you edit, you need to locate the item, edit it. And when you do that, you just locate that section, where you have the sales price. You can always update this to be, what you now want it to be. Right. So okay, that is being noted. Okay, so now let's go into creation of suppliers. So how do we create our suppliers? Our suppliers is being created, from this module called expenses, right? From the module called expenses, we have the suppliers. And you see that on this screen of ours, QuickBooks has a further categorization here saying bookmarks, and menu. So I can close all what we have in menu, close all what we have in bookmarks, right? But under my menu here, I can make some screens primarily available, from on my bookmarks here. So I can come here and say, I want to add these my suppliers here to being, a bookmark, so that even without having to toggle for much, if I want to create any supplier, I want to generate any supplier related statements, I can easily see that from here, right? But by default, from on QuickBooks, you see your suppliers list, and when you go to your expenses module, you see suppliers. And because we do not have any suppliers, like we said, we can always import and we can create manually, right? So to create a vendor manually, let's go back to our class exercise, because of time here. Let's go back to our class exercise. So we have 4 vendors here to be created, right? We have 4 vendors here to be created. So the first of it all, is Greenwell Nigeria Limited. And you can see this is the supplier's feed. This is the supplier's feed here. One moment, please. Just spare me a minute. Please spare me a minute. So I'm back.
All right. Thank you.
Okay. So yeah, you know, we are trying to create our vendor here, and as you can see, the vendor's first name, middle name, last name. If there's any contact person, right, as it relates to that vendor, we can always specify here, right? But for the sake of our training exercise here, so let's quickly move. We need to create, Greenwell Nigeria Limited as a vendor. Yes, as a vendor, yeah. So we come here, paste that in, display name and company name the same. If there's any email, attributed to that vendor, you can always specify it here. The reason for that is within our QuickBooks application, when we want to send, be it purchase order, be it suppliers invoices, right, to our vendors to acknowledge that we've received any goods or whatsoever, right? We can always send it to them. We can always interact with them even using QuickBooks Online. You don't need to initiate a fresh email or download and scan to PDF and all of those sorts. No, so that is the essence of adding emails, right? So phone number, these are, remember, these are just random phone numbers. These are just random phone numbers for the purpose of our training. Okay, so we have other information here, websites, the company's, the business address. You can always specify them here so that anytime you are sending anything to them, it shows their address as well. And as a good accountant or business person, the best you want to do, is to ensure that you keep accurate information with respect to your vendors or your customers. So their address, there are some of these things needs to be properly maintained in the system, right? Needs to be properly maintained in the system so that can be rest assured that you have everything under control. Okay, so if you have their tax identification number, you can always specify the default payment terms. So let's say this vendor, when they give us any invoice, it takes 30 days, for it to be settled, you know. So that's what we call payment terms. So this is a default payment term, right? But at the point of transaction, you can always specify the one you would want. Okay. So now, having said that, opening balance, okay, there's no opening balance quantity at that point. Okay. So this is fine, right? So the primary thing is the vendor's name, their contact information, their office addresses, their phone numbers, and some of those things. You want to keep some of those records. Those are some of the most important things you want to do, right? And when you do that, you save. With that, you've created a vendor within the system. You've created a vendor. Is as simple as that. Very, very straightforward, right? So to create other vendors is very simple, right? It's just for us to come here, you know, click on new supplier. Similarly, that AC Finance, it's very, very fast now. So the address, go to the address section. Okay, so Lyric can come here as a city. Okay, so country, Nigeria. So very quickly, what else do we have here? Email. Okay, email is here. Phone number, right? So creating vendors is quite easy, right? So you should note, for those of us that are non-accountants, vendors or suppliers that we are talking about in this context, are those people that get to deliver, you buy items from, right? Items that you resell primarily, right? Items that you resell primarily, and you could equally have some sundry vendors, right, within the system as well. So sundry vendors have to, some of these vendors that they provide maybe secondary services to you, you know. But the only thing that would warrant, if you need to create those within your system, is the fact that, okay, do this vendor, do you get to owe them? Do you guys do a settlement kind of thing in piecemeal, right? So if you have such kind of contract with a vendor, such that you can owe them 2 months, 3 months without paying, and you can always create them in your system, as of course your sundry vendor. So similarly, the same way uh we've done this is the same way you would go about that, right? So Panocean Nigeria Limited here. Okay, so their email address. So if you have any question, please feel free to drop them. Okay, phone number here. Uh, this address as well. So, but if you do not know the address of your vendor, to start with, the system still allows you work anyway. It's not a compulsory field, right? But it's just good if you have them as an accountant and as a business person, right? It's, it's very much advisable. Okay. So as you can see, we've created all our vendors. And similarly, that is the same thing we can do, for our customers. It's just that that will be done in a different model, right? The vendors we've created, you see how transaction, gets to affect them. Likewise, the customers that we'll be creating now, right? Likewise, the customer that we'll be creating now. Okay, so let's quickly create customers. Customers can always be created, within QuickBooks Online from the customers and leads module as well. Right. So when we come here, you come to customers, right? Then you can always add your customers. Customers are those that we sell to, right? Customers are those that we sell to, you know. So you could have, and you can always create customers and even suppliers as time goes on. Do you understand? So it doesn't mean this set of suppliers that we've added are always the ones you would always be making use of. No, there will always be need to create, as transactions, ensue. Okay, so now customers are those we sell to in order to recognize our revenue or our income as a business, right, or as an organization. Okay, so to create a customer, similarly, we go to the customer and leads module. Then we create add customer manually here, being the first time. Then we specify our customer's name. It could be individual names, it could be corporate customers. It doesn't matter at all, right? So the customer's email address too, like I said, the reason why, one of the benefits of using QuickBooks Online is that if your customer email is there, you can always initiate invoices and send to them directly from the system. So they get the email automatically, right? Automatically. When you raise invoice, you can always send to them, generate customer statement and send to your customers, right? If a customer is owing you, you can send them, their statement to say, oh, check this out. This is what you are owing me. This is the breakdown of, what you owe. So, and that is how it works. Okay. So now, yeah, customers, very easy. The customer name, the email address, the phone number, the customer's address, if you have such information, can always be entered, right? Like I have done. And you click on save. very, very easy. Very, very easy to use, right? Very, very easy to use. So I'll come back to my list of customers. I can always click on new customers. And should you want to import as well, the system allows you to import, your customer list from Excel, right? So email here, specify email, phone number. Okay. So this is fine. This is fine. Okay, customer address. Let's just do that. West Atlantic. Okay. Okay, no, Noble, 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 Noble. That's an error. So this should be for Noble. Okay, so I'll click on save. Then immediately go back one step, then create the next customer. Atlantic. And in some situations, some organization could be like, we have quite a lot of working customers and all. We cannot be keeping all their records all the time, right? So you can create a general customer as well, right? You can always create a general customer as well and just post, those working related transactions to that account, to that customer, that general customer account, and you are good to go. Okay, so let me copy the next progress limited. So I'm actually moving faster just because of time, so that because we still have, a couple of things that need to be done, our time will be well utilized. So phone number, then the address. Okay, so then lastly, phone call limited here. Go back one step, create the final customer, their email address, copy and paste is all I'm doing to make it much more faster. Make it much more faster. Okay, so I'm just lifting those informations from the class exercise, and I'm pasting them in here. So, but all we need to note is who we call our customers, right? So that we can always, okay, they are being added now. Then we click on save. So when you check here, we now have, all our list of customers already, created. That is with respect to the training. So they all are now created already, right? And you have set, a couple of activities that can always be done, with respect to individual customers. You can always click to edit, a customer's information, right? You can always mark a customer as inactive, at any point in time, right? So that is for that. Okay. So within these few minutes, right? Look at what we've been able to do. We've been able to create inventory items with respect to their category, having to link them with their ledger accounts. We created suppliers. We know who our suppliers are, right? And now we've been able to create, customers within the system. And why are we doing this? We are doing this because we want to be able to do transactions, right? We'll soon be calling today's class a day, right? But let's just look at some things quickly, which is the standard, operating process of a company, of a business. Most likely would start with the fact that, yes, currently we do not have any items on hand, but there is need to buy some items. Let's say that, yes, we want to procure, some items from a vendor. Now, how does it work in a typical business scenario? Or as a business person, how do you go about that? Using, QuickBooks Online as your application, or using any accounting software. And mind you, all of these transactions we'll be discussing and will be showing us and will be raising together, you know, is not only in line with how it works on QuickBooks Online here, is equally applicable across other applications, because I would try as much as possible, to be general and to make it much more simpler for us, right? So that we can always get it clearly, right? So the knowledge you are getting here, or you'll be getting here, be rest assured that it is actually usable, when you come across a couple of other applications. Look at some of these things we've been doing. It is general across accounting systems. The only thing is, let's say their nomenclature in terms of name could just be different. Some systems could call vendors, they could call it suppliers. Some systems could call it vendors, but vendors are the same as suppliers. And when we are looking at transaction proper now, right, some of these documents, the way invoices, suppliers related invoices would work within QuickBooks Online is still the same way to work, on a couple of Sage applications, on a couple of other QuickBooks software, right? So those are what we want to quickly look into before we draw curtain on today's class, and which is, how do we buy from our vendor? How do we procure items? Right? Very, very important. So now, this is what I will be walking us through, because we'll be looking at vendors related activities within the system. Vendors related activities within the system. Okay. So if you have any question or any challenge, please feel free to let me know. Feel free to let me know. Okay. So now, to do vendors related activities or to do any transaction on QuickBooks Online, this is what you need to do, or this is where you need to go to. You need to click, when you click on the new button here, the new, the plus button here, by your top left, of your screen. When you click on new, you see some of the transactions you are able to do, right? And it has been categorized already. You see customers related transactions, vendors related transactions, and a couple of other, activities, right? But to start with, we want to do what we call a purchase order, because in most companies, in most, organizations, you know, your purchase process starts with what you call a purchase order. And the question is, what is a purchase order? A purchase order is like an instructional document. It's an instructional document that you raise as an organization and you send to your supplier, right? Saying, please, we want you, you know, to sell to us or to deliver these items at this also price. But in most standard organizations as well, even before the purchase order, there are a couple of activities, and that is where ERP systems, come to play, right? So you could have internally, you could even have, purchase requests, purchase requisitions, and all, right? But what you need to note is this: that even before you send a purchase order to a vendor, right, to a supplier, you need to, first, you need to request for their quote, to make an inquiry from their end to say that, okay, so you can write to them, or you could put a call to say, oh, Droidedge Nigeria Enterprises or whatsoever, do you guys have this item, this set of iPhone 13? You have this also laptop, this spec, and if you have it, how much are they? Can you please send us your estimate? When they send you their estimates, when the suppliers send you their estimate, you want to look at it and you want to see, oh, is there a way we can beat down, some of these price? At the end of the day, when you tell them, oh, this is, can't this go for this? Oh, when they tell you that is the standard, price that they are willing to give you that item, You could now look at it internally and say, okay, with this cost, we'll be able to buy 10 laptops currently. So because you already know the costs, you are already aware of that price, the cost the supplier is ready to sell them for you, you then raise what we call a purchase order document to say that, oh, supply us so. You must have identified them on your purchase order, right? Supplier also, so you are giving the supplier an instruction. That is why I called that purchase order an instructional document, telling the vendor, we want to buy this from you. It's not an inquiry now. Rather, we want to buy, right? So you raise a purchase order within the system, right? And when they get the purchase order, they can now choose to now deliver those set of items to you. So most purchase within QuickBooks Online or within most accounting softwares, right? Their purchase process starts from your purchase order. Do you understand? In as much as in reality there are some preliminaries that could have happened, for some of us that are fresh in the accounting field. I just have to explain those things in detail for us so that we know how it works in a business scenario, in a company scenario, right? But within the system, we are starting from a purchase order. So we want to raise a purchase order. And I did that by clicking on my new, right? Go back one step again by clicking on my new and clicking on purchase order. So this is my purchase order screen. I have here the header part where I can select the supplier, the date, and some of those things, right? Then I have here, the details where I can specify individual item at what cost. Are we requesting this to be provided for, right? So to start with, which vendor or which supplier are we sending this purchase order to, right? And let's now make reference back to our class exercise. Let's make reference back to our class exercise, right? We have a couple of activities here that's saying, that some items were purchased. You can see transaction for the month of January. In this case, we would use January 2023. Sorry. We have, sorry about that. So you can see we have some item purchased and some payment that are being made to vendors. Yeah, sorry about that. So now we were told that, okay, on January 2nd, right, 2nd of January, right, that, okay, with respect to Greenwell Nigeria Limited as a vendor, that we bought, HP Lightbook laptop 6 units at the rate of 110,000. Now, we want to assume that we started that process from a purchase order. Remember, I stated that a purchase order is an instructional document, right? It's an instruction. So we've selected Greenwell Nigeria Limited, right? So purchase order date. Our purchase order date, is within 2nd of January, actually. 2nd of January 2023. Let's stick to 2023 now. 2nd of January 2023, right? Yet, that's our purchase date, that's our purchase order date, anyways. So now, what are those items? What are those items that we are selecting or we are buying? We have here HP Lightbook laptop 6 units. I'll come here to the details, right? To say, okay, HP Lightbook laptop, right? Because it is being created as an inventory item already. It's created already. So, but imagine if it were to be that the item was not there, then I need to go and create them, right? I need to go and create them. So I've selected HP laptop, HP Lightbook laptop. At what rate? How many units? 6 units at 110,000. Okay. So is there VAT? Is there VAT? You know, in this amount, we want to assume VAT is not included yet. When we get to suppliers, invoices, I would explain the context of that VAT to us, right? So we want to assume that, okay, this amount, this 110,000, right? There's no element of VAT in it yet, because the VAT, value added tax, is what you remit to FIRS at the end of a certain month, right? So it's just like a sales tax that is going to the government. So but then you need to confirm, when, so as an accountant or as a business person, when you are working with figures, sales figures and purchases figures, you need to ask yourself, this amount here, is there element of VAT in it already? you know you need to ask yourself. So I am assuming there is no element of VAT in it, so it simply means the amount in question is exclusive of tax, which is what we have here, saying amounts are exclusive of tax. Do you understand? So but if this line item is not vatable, if it is zero rate, I can always select the applicable thing here. So but 7.5% VAT, class. Well, class is another, is a reporting feature. Class is a reporting tool, and location as well. Is a reporting tool that allows you do management kind of reporting. So we could create several locations. I could create 3 locations to say, okay, Lagos, Abuja, and let's say we have branches in all of these places. Let's say we have branches. We could create locations as branches, right? Let's have Port Harcourt. Okay, have it saved. Okay. So I think that's enough. Class, we can also use class to drive, a couple of other things, so that at the end of the day, our reporting would make, more sense. Okay. So, well, we can always come to that. So what other items do we have? HP Pavilion, 5 units at the rate of 120,000. So I'll come here, select HP Pavilion, 5 units at the rate of what? 120,000 per unit. Okay. So that is being done already. So that is equally exclusive of VAT. Okay, I want to do that, and I want to do what we call save. Because when you do save, it simply means you've posted that transaction. That is how QuickBooks Online works. When you click save, save simply means you've posted, right? So let me click on save. Now, the next question you want to ask yourself, or you want to ask me, is this purchase order that we've raised just now, right? As you can see, the system will do the subtotal, the system will do the VAT, will calculate the VAT and will give you the grand total, right? So, but the question is, what is the effect of this purchase order that we've just raised? What normally happens across any application when you raise a purchase order? So, like I said, purchase order is just a mere instructional document. Nothing would happen financial wise, right? I can raise as many purchase orders as I want, to a vendor, right? But provided that document still remains, a purchase order, not there is no impact in my books at all. I have no impact whatsoever, right? The system does not have any impact. Doesn't have any impact, right? So simply because it's a purchase order, I'm here to receive the item. So there is nothing, the system is not doing any debit or any credit. It does not have any input. It does not translate to anything financial wise in your books, because it's just, of course, a purchase, order. It's just a purchase order within the system, right? So that is what you need to note, right? That is what you need to note. Okay. So now we've raised the purchase order. Let's assume we've been able to print that purchase order and we've sent it, right? Let's say we've sent it to a vendor. That is the first step. Then we'll wait. Once those items are being delivered, once it is being received on hand, what do? We go ahead, and convert such purchase order to what we call supplier's bill, right? Supplier's invoice in some systems is what you call bill, within QuickBooks Online. So when those items you have on your purchase orders have been delivered, you need to come into the system to either convert an existing purchase order to a bill or to just raise a bill directly. The bill in this context is equally called suppliers invoices, right? The bill in this context is equally called, suppliers invoices. And when you want to raise a bill, the moment you select the supplier, if there's purchase order, any purchase order at all, right? The system would suggest it for you here. So I can always come here, you know, and call up my purchase order, because the delivery I got as at this date, I want to assume that same day was the date the items were delivered. So the delivery I got as at that date, right? There is a purchase order to that effect. So there is need for me to link that purchase order there. And you see, at the moment I select the vendor, right? The system, suggested the purchase order for me, right? And at the same time, what I have done is just to link, the purchase order, so that the only thing I get to confirm here is my dates, right? I want to show what is my due date for settlement, of this particular on this particular invoice. So the bill date is 2nd of January, fine, right? So bill number, what is the invoice number, supplier's invoice number? I can say this is SIN, 01, right? So location, yeah, this happened in my Lagos, office, in our Lagos branch. So what items? Now, this is another thing you need to note. Remember, we gave a purchase order out on 6, quantities of Allied book and 5 quantities of HP Pavilion. That is what we have on the purchase order. But in business related cases, there might be situations where some of these items are being delivered to you in piecemeal. So let's say in the first instance, the suppliers bought 3 out of, HP Allied book laptop. They delivered 3 to you. So when you are creating a supplier's invoice, when you are converting a purchaser to a supplier's invoice, what you should be after is actually the quantity that are being delivered at that present time, right? It is the quantity that is being delivered at that present time. Because two things would happen when you finalize this supplier's invoice. Number one, the quantities of items you have specified here would be received automatically in your system warehouse. So you can see, if we have given 6 out on a PO, if 6 is what we requested and they brought in 5, what do? We come here and we specify 5 as a quantity, right? So that purchase order will be saying, okay, we'll be having an outstanding of 1 to be delivered. Because so that in our system we can recognize the fact that, okay, 5 items were received. That is first. Then secondly, your vendors, that supplier's account will be affected, because supplier's invoices will translate, to say that, oh, you are owing this vendor automatically when you finalize the supplier's invoice, until when payment is being made. I don't know if some of these things are being gotten from our hand, right? But primarily what we should be after here is the items, the quantities that have been delivered. So luckily for me, right, the same set of quantities are this, are what are being delivered here, right? So I will just confirm, okay, is everything still okay? Okay. But imagine a situation where they only delivered HPL Light book. What do? I will just eradicate this second line. I will just delete the second line, which is saying HP Pavilion, because they didn't deliver it. So you can see some of these things are things you need to look at your present scenario, right? You need to look at your present scenario so that you can always ascertain how you go about posting some of these things within the software. You know, so that being said, Let's now finalize our suppliers bill, right? Let me purposely create a class. Class is like another secondary reporting tool. So let me make my class my department. So let's say I have, operations as a department. Uh, okay, so it's a revenue center for me. Operations. Let me create, other departments like accounts that we can generate, activities based on some of these guys. So let's create for HR and admin. So let's say human resource. Okay, save this. So, but we will understand what class does as when we get to reports. So, for dynamic reporting or for management reporting wise, can always use class and location, for your uh, QuickBooks related, activities, so that you can generate report on some of these things at the end of the day. So I will do this, and I will do save and new, because I want to be able to do two other invoices straight up. I wouldn't be doing, suppliers. I won't do purchase order again. I just want to do, invoices straight up, that AC finance. If you have any question, please let me know. Time is fast spent already, but please drop your questions. So that AC finance, actually the same date on the 2nd of January as well. So I'll come here 2nd of January. So what is my uh, payment term? So let me say this is due on receipt. Okay, the same day. So bill number, the same supplier invoice number. Let's say this is SIN02. Having to specify that. Let's say this location, is with respect to my Abuja store. I'll select Abuja, right? So then I'll come here, item details, select the item in question. So they bought Samsung 5 units at this amount, 65,000. So and they bought S22 Ultra 2 units at that amount. Okay, so let's see. Samsung, okay, let's go for our S9 Plus. Let's do S9 Plus. So what quantity was gotten? 5 units at 65,000. So 5 units at 65,000. Okay, so that is fine. Yes, there is VAT on it. So the second item here is S22 Ultra 2 units, Samsung S22 Ultra. So 2 units at what amount? So this is at the rate of 200,000 each. Okay, yeah, 7.5. So the class here ought to be operations two, ought to be operations two. Uh, But for the purpose of reporting, let me select accounts. So that we see how some of these things works, right? So now this has been done, save and new. I've raised, another supplier's invoice. So what I have done has translated to my payables. The system will recognize that I'm automatically owing that vendor, and we've received those set of items, right? So yeah. So lastly, Panocean Nigeria Limited, we bought iPhone 8, 3 units at 75,000. So Panocean, okay. Due date, let's say it's 15 days. What date? Okay, that same date makes it interesting. Okay. So bill number, let's say SIN003. So for dynamic reporting as well, I'll select Port Harcourt. So iPhone 13. How many units? Sorry, iPhone 13. How many units? 3 units at the rate of uh 75,000. So these are just, imaginary figures anyways. So the class, let's say this is directly attributable, to, yes, let me leave it at operations. Yes, operations. So this is very much fine, right? So these are the things you need to note when doing suppliers invoices. Number one, you need to ensure that you are selecting the right vendor. Very, very important. Secondly, you need to ensure you are selecting the correct date. When it comes to postings on accounting transactions, dates are very, very important. If you are not sure of that thing that you want to enter or you want to post, hold on and ensure you confirm. Because any date you've selected, it determines how your reporting would be. So let's say, yeah, I was supposed to select January and I selected February. It will affect my quantity on hand for items because the system will recognize that I received that item in February. Whereas, let's assume it was originally received in January. So it is very, very important, right? The vendor, select the right vendor so that the right vendor's account to be affected. The correct, date needs to be confirmed also. Then lastly, individual items, their quantities and their amounts needs to be confirmed. Systems is all about garbage in, garbage out. What you key in into the application is what you would get in form of reports. If I had imputed here that I received 3 quantities, the system will recognize 3 for me. But if in actual reality, if what I received is 1 and I imputed 3 here in error, there's nothing the system will do. So I need to now be reversing and doing a couple of other stuffs and even reconcile, even before I would get to know where the problem is coming from. So please, accounting systems is all about garbage in and garbage out, right? Your input translates to what you have as your output. So this, you need to be very, very careful, right? You need to be very, very careful when doing these transactions, right, within your system. And like I said, the supplier's invoices does 2 things. When you have received any form of service or any form of item from your vendor, right? So you need to come here and recognize it as a supplier's invoice, and it could emanate from a purchase order. And some companies, they don't bother doing purchase orders using systems. They might be doing their purchase order outside the system. Well, it happens in some companies. So they just come here to just do, purchase suppliers invoices. But just have it at the back of your mind that, process-wise, organization-wise, your purchase order, that is where, accounting system would always start their purchases processes from. From purchase order, it translates to purchase, invoices, which is called bills, like what we've done. Okay, so save and close, and that's solves that, right? So we are coming to the end of today's session already. So let me just run you through some of the things we will still be looking at. We'll still be looking at uh suppliers returns, which we call suppliers credit in this case, right? We'll be looking at payment to suppliers. How do you post payment to suppliers? How do how do you ascertain some payments, that will be classified as payment to vendors and some that will just be classified as normal expenses, right? And also the element of this VAT, we'll be looking at that extensively tomorrow. And tomorrow we'll be looking at our customers related transactions. We'll be looking at our customers estimates, which is equally called quotations. Looking at invoices. What are those dynamics we need to know when invoicing a customer? What would happen? How best is it? How best can we go about some of these things, right? Credit note. What does a credit note does? What is the main function of a credit note, and in what scenarios do we raise credit notes? We'll also be looking at that tomorrow, and we'll be looking at typical business expenses. How do we capture expenses, right? Cash and cash, bank or cash related expenses. How do we raise journal entries, and how do we generate so many likely reports? There are so many things we have lined up for us tomorrow, right? Because we are coming to the end of today's session already. Let me see if there are any questions for us as we speak. Okay, I think we are good. Yeah, we are good. So, we've done quite a lot today, right? We've been able to set up our system. We've been able to uh, look at differences between an accounting system and ERP system. We can always make further research on that ourselves, right? So so that when you are discussing out there, you can easily, tell people that yes, you are familiar with this and that. Okay, so we looked at setting up, the system, setting up our chart of accounts. What we need to note, when configuring the chart of account, how we can set up a chart of account, right? And we've looked at creating inventory items, inventory related items and service items, how to ensure they report well. And we've equally looked into how to create vendors, customers, and some vendors related, transactions. So there is a lot that are lined up for us tomorrow. Just to remind us again, so my name is Aziz Adeomi, right? And of course, my colleague would be speaking just briefly to us before we. So just to bring to our attention once more that we are from Droidedge Consulting, basically. So these are just some of our trainings that we do organize, just to ensure more people are skilled out there, right? To ensure more people are skilled out there. And like I mentioned earlier, we are a software IT firm. Okay, so we do a couple of systems integrations, configure accounting systems, right? CRM systems and payroll and HR systems as well. Fixed asset systems, and we always, help in process automations. Should the organization need, let's say, there's a need to put in place one or two processes with the use of software applications, right? So be rest assured that we are always a go-to, software company when it comes to that. And here is a few of our, partners that we've partnered with, called software companies: Sage, SAP, QuickBooks, Zoho, right? Microsoft, just to mention a few, right? So thank you for making out time for today's session. So we'll be sharing the today's just after this session. We'll upload the video for us, share with us, so that we can always, go through it and practice and do one or two things, in preparation for tomorrow's class. So thank you, and please, we look forward
All right,
to
thank you.
your review, on the group chat. Look forward to equally your review, on some of our other platforms that we'll be sharing with you. So thank you so much. So yeah,
Thank you.
Olabi, you can
Thank
take
you,
it.
everyone, for attending today's class. We really do appreciate your time. And like my colleague actually said, tomorrow promised to be much more interesting because we'll be diving into, various transactions that, occurs, within different activity levels in different organizations. So we want to take a look at those various things, and we crown it all with reporting. We want to be able to make people understand how to generate insightful reports from the system. What will be the beauty of you posting all of your transactions, setting up your ledger and everything, and you can't even generate a report that would help managers make informed decisions. So uh, we'll be looking at all of this, in much more detail tomorrow. And we thank you for your time. Just like you said, we'll be expecting your feedback on some of our platforms, like the WhatsApp group chat and our Google business page. Thank you. Thank you for your time.
Right. Thank you. Okay. So okay, no problem. So if you are having any concern or any challenge, please feel free to reach out to us on, WhatsApp or via email. Or we'll be rest
Yeah,
assured that
you can use the WhatsApp group chat
yes, yes,
so that the answers we provide to some of these, question of yours can other participants, no participants can also benefit from that. So we want to use the WhatsApp group chat as a medium of communication for question and answer. That is actually why it was being created. So
yeah.
thank you. You can drop your questions there.
Thank you. Yeah, enjoy the rest of the day. So we'll be looking at, attending to some of your questions and reviews. Thank you so much.